All right. Hello, everybody. Welcome back to another episode of the Market Close. Your boy is early. We're early. We're here live. Hopefully this makes up a little bit for the technical difficulties we had in the morning and starting late, but we are live. I was just listening to Steve, Chris, and Matt. They are having a fantastic debate on their channel right now. And I was like, dude, I got to do a market close, but this debate is so juicy. So if anyone wants to listen to their debate, I'm just going to leave the link in the chat and you guys can go check them out and listen to their fire. I think Chris is taking the bear side on AI, not necessarily bearish AI, but just like, I think they're debating like the dot-com bubble versus now and what's similar, what's not. And Matt and Chris are kind of on the, hey, things are a little frothy, and Steve's like, no, it's not. So it's a fun debate that they're having. I'll listen to the rest of it later. I'm listening to both simultaneously. There's no way you're listening to both simultaneously. But if you are, that's kind of funny. Jason will be on in about 15, 20 minutes, and we will get into Technical Tuesday. This is the last TT of the year. So we're going to be doing end-of-year charts, essentially, today, and we're going to try to get through as many as possible. But overall, green day. I mean, Nvidia, she's carrying the market right here. I left at 187. We are at 189, up 2.93% on the day. S&P 500 up 0.5% after being up 0.5% yesterday. So you got a full 1% in the past 48 hours on the S&P. 687.95. We did touch 688. The all-time high is 690. So we are very close to breaking that all-time high. Realistically, it's been done because of Nvidia today. I mean, you've got some names that are helping out, like an Amazon that's up 1.3%. Tesla and AMD are red. Palantir just turned green. You got Microsoft that's up a little bit today. SOFI is flat. BMNR is down 3%. Netflix is flat. It's Nvidia. Nvidia is what's leading the market today. Broadcom as well, kind of picking up with Nvidia right there. Look at Broadcom up 2%, 348. And we'd even touched 350. Haven't seen 350 in about 2 weeks. So nice to see it at least get to those levels, carrying or following with Nvidia's lead. But I think that's the story of the day for why the market is up. I mean, Nvidia is 8.2% of the S&P 500. Nvidia has a big move. The S&P 500 kind of follows up. Now, Rocket Lab continuing to sustain its momentum. You've had some of those IPOs that are down 60% today. FJet, same thing with Saidu Space, which is not a recent IPO, but this stock also down 30%. But Rocket Lab not giving it up. I mean, you're seeing some of the space names sell off, but they're rotating right back into a name like Rocket Lab. ASTS even only down 1% of the day, which is not too bad after a 15% day that it had yesterday. So data center names are down. CoreWeave, Nebius, IREN. You got Robinhood that's down because of crypto. The Qs are up because of Nvidia. ZETA, which I will have a deep dive coming out on ZETA and Reddit in a couple of hours. I will say TLDR, way more bullish on ZETA than Reddit because of the valuation. Reddit's probably a better quality company just because they've been doing it for longer, but ZETA is cheap at $4.4 billion market cap. Reddit is not as cheap at $233 a share. So those deep dives will be out a little bit later. But I mean, overall, you got a relatively red to flat day across the board. AppLovin's down 1%, Oklo's down 2%, PayPal's down 0.5%, Shopify's down a little bit, Nike's down a little bit, Micron, which is at 281 in the morning, that's now red on the day. But Nvidia is leading 189. Maybe we go for that 190 close. That would be nice to see. But if we don't, hopefully we can at least hold 189. Which would not be the worst thing. Chris and Steve are fighting currently right now. Are they actually fighting? Are these guys going back and forth? I don't know. Let's go to these guys real quick. Let's see.
That's what we're saying. That's what we're saying, Steve. There's no longer a run room. If you add in dividends and buybacks into that, there's no longer a runway where they can't not longer dive into debt.
They also
say we're watching them on the market close right now.
Have to buy back as many shares as they were.
Right. In which case now you'll get a multiple re-rating lower. What do you want? You want to do that?
Just because buybacks go down does not mean that EPS won't expand. That comes down to how much revenue they're adding and if they can keep the same margins.
I think you have this idea that they can keep spending unlimited amounts on CapEx and grow at an unlimited pace. I'm saying there's probably a point where these guys, and I'm telling you, the businesses themselves are already highlighting.
I love it, dude. This is what it's about. It's about going back and forth. This is how we try to come to conclusions in the stock market as individual human beings. I think the debate they're having is about a bubble or not, right? Matt, Matt's in there. Matt, are you guys debating a bubble or not? Because I didn't really get the gist of what you guys are debating. I think Chris says that it could be a bubble, and Steve's like, it's not a bubble. I don't know. But the point is they're fighting, which is always good entertainment when they're fighting back and forth. So it's what you got to do. It's what you got to do to come to better conclusions and test your thesis around the market. NVIDIA right there, 189.20. We got 11 minutes until we close. And Broadcom really leading the way. Those are the two ones that are having a good day. Broadcom right there at 348 and NVIDIA at 189. Okay, let's see what other headlines we have before we get into Technical Tuesday. We had a couple different things. Oh, Bolivian data centers are getting some investments from Amazon, Oracle, and Tesla. Amazon, Oracle, and Tesla. So that is another headline we got this morning on data centers. We had Google acquire Intersect, which was a $4.5 billion company yesterday in the data center space, and you're seeing more investments in data centers in Bolivia. So that is one announcement we got today. They're fighting about if we're in a bubble or not. Okay, that's what I thought. I'll get to check the rest of their analysis later on that, but that's always a good debate, going back and forth on whether it's bubbly or not. This was a big tweet today. Trump, which I'm not going to read the whole thing, but it's basically him just saying like the markets are great. But the last sentence of this is what I think spooked out the bond market today. The United States should be rewarded for success, not brought down by it. Anybody that disagrees with me will never be the Fed chairman. As soon as our boy Donnie T said that, you had the 10-year spike, because what has been the biggest concern around the bond market, even after a rate cut, and why these yields haven't come down, is the independence of the Fed, right? Which is why Trump is interviewing people outside of Hassett, because Hassett is seen as like essentially a loyalist to Trump. And although the 10 years calming down a little bit now as we get into the end of the day, I mean, if that is the argument for the new Fed chair, that anyone who disagrees with me cannot be the Fed chair, I don't think it's a bear case. It's just one of those things that the credit markets might be annoyed with. Now, again, every administration is political, and every administration is going to be biased towards the people that they want to pick. You're just not supposed to say it like that, right? Like, obviously, yeah, if you disagree with Trump, you're probably not going to be the Fed chair. If you disagree with Biden, if he had to pick a Fed chair, he probably wouldn't pick you out. But the point is, you're not supposed to say it like that. And Trump just says it. And, you know, that is what sometimes pisses off the market. I am home, for those that are asking. I'm home for the next 5 days for Christmas break. So I'll be back on Monday to the regular studio. We will be live tomorrow. We're not going to be live on Thursday because of Christmas. And then we will be live on Friday. And then Sunday for futures, I'll be back at the studio, and we'll keep going from there. Nvidia losing 189 into the close. Let's see if she can get there. AMD, weird that AMD is red and Nvidia's green. That's the other thing I've been seeing today. Kind of weird that Nvidia's green and everything else is red. And not saying everything else is fully red, but like, I mean, you would think Hood has a nice day when Nvidia does. Nope, that's not happening. Palantir barely green, even though Nvidia's green. I mean, Microsoft's up a little bit here. SoFi is not really participating. VG, though, great day for VG. So VG getting some more momentum. 14 million shares. Average volume is 10 million. VG is 14 million. But some people could be arguing that the Nvidia move is a head fake right here, because like usually the other semiconductor names follow with it. And I don't think there's an Nvidia specific headline today outside of the China stuff, which actually should implicate AMD along with Nvidia. So yes, Broadcom's moving with it, but like it's weird that AMD's not. And so I don't know, maybe we need another couple of days of data to see if this Nvidia move is real and if it can hold on. But it is back above 170, where it was at last week. So anyone who bought that 170, 174 dip, you are doing relatively well as Nvidia's up. Amit, will you start covering VG? I already have a small position in it. You guys keep talking about it. So inevitably, I'm going to have to start really learning about liquefied natural gas. I don't really want to. I don't really care. Like, I genuinely do not care about liquefied natural gas, but I feel like there's a cult that's starting to become real about VG. Why do you guys like this thing so much? It's like, I'm not saying the company's bad, but it's like, do people care that much about LNG? I get why Matt cares, because he works in that space. Chris has always studied this stuff, but the rest of you guys are like junkies for VG. And I'm like, it's just gas. Like, is it that exciting? But I guess it is. And that's why I have to pay more attention for it. So yes, I will try to, I've never actually analyzed an oil and gas company. So maybe this one is the first one that I should do a deep dive on. in 2026 and get some updated thoughts. Amazon right there, 231.99. That's up a little bit. NBIS back below 90. That's down 4%. IREN flat on the day. Red Cat's up a little bit. Meta 663. Broadcom again 348. And then we got Nvidia trying to close at that 189 level for Nvidia. What else? What else do we have? So we got 6 minutes to the market close. We'll have Jason as soon as the market closes. We'll get into it. PCE, this was a stat that I thought was pretty interesting. So we had the GDP numbers that came out today, 4.3%. So really, really bullish for the overall health of the economy. The reason I think we kind of went red in the pre-market, which is a concern that could follow into 2026, is that rate cut probabilities fell below 15% today because now the market's saying, well, wait a second, if GDP is this hot, why do we need a rate cut? Which is a fair point to ask. If the labor market is not that weak and people have enough money to keep spending, maybe we don't need an accelerated amount of rate cuts, which may not be the best for the equity markets next year. So that is one of those questions that we're going to have to talk about. But this is the percentage change in personal consumption by category today. Healthcare was number one. Healthcare was number one. And so maybe there's an argument that the healthcare stocks, which we already know are relatively cheap, even though they have their own headwinds going into next year, especially because of those ACA subsidies, maybe they catch a bid next year, as PCE had the highest change in personal consumption as a percentage of the overall category or the overall aggregate amount of expenditures in healthcare. So it could be one argument to think about next year. Where's UNH? Are we even at 350 on UNH? Nvidia looks like she wants the 189 close. UNH 325. This thing was at 600 earlier this year. So this one definitely still down right here. Bitcoin is green. MicroStrategy is red. Bitcoin is very slightly green. That's probably why MicroStrategy is still red. 87,000 on Biddy. Where's gold and silver? MicroStrategy. Well, MicroStrategy is down worse than Bitcoin today. You might just have some more downside pressure on the sell right there. It is almost the end of the year. You probably got a lot of people also getting ready to take some of their losses and offset it against their gains. Wow, silver 71. Oh my goodness, dude. Is silver the trade next year, dude? I want to say no because it just feels so toppy, but maybe silver is the trade. I mean, if these bond yields don't come down, people are going to put their money somewhere. And if they don't want to put it into an S&P that they think is expensive, you got silver, gold, palladium, platinum, a lot of other categories that could be working. Silver is to gold as Ethereum is to Bitcoin. Yeah, and Ethereum and Bitcoin really haven't worked this year, and silver and gold have worked phenomenally well. My uncle did know something about silver, but he texted me today. He's pissed off, dude. He's made a lot of money on the copper calls. Like he's made over 6 figures on that, which has done very well. But he sold silver at around 40. So he sold silver way too early. And it's funny because he was the most bullish out of me and my cousin. We have a group chat. And every time he sends us silver due diligence, we're just like, okay, whatever. Like we just like, cool story. And then silver makes the move, but he just didn't hold on long enough, which is understandable. I mean, if you bought silver, I think he bought silver calls at 20 and it goes to 40. It's like, okay, that's a pretty big move. But sometimes when you stay around for the ride, it can really be an exciting one. S&P 500 right there, 688. We did hit a all-time high technically at 688.13. That's a 52-week high. 690 was after hours. So technically we have hit an all-time high just now because the 690 that we hit was after hours the day that Broadcom had earnings. So I don't know if it necessarily counts. But yeah, I mean, I don't know if this is what it's supposed to feel like all-time highs on the S&P 500, but we did just hit it, which is exciting to see. And so that's what you got on the S&P. Steve and Chris are still going at it. Dude, are these guys still arguing? I was listening before the show, and I was just like, it was already getting intense. I was like, this is getting juicy now. This is getting juicy.
Here, I'll let the little dividend that I
Of course, as soon as I go on their stream, Steve says, I don't care. Of course.
get from the S&P roll back in and buy me more shares. My Meta shares, no reason for me to get rid of them. Amazon, no reason for me to get rid of them. Same with the other ones. Now, as far as what's going to happen next year, I do think 5 or 10% down at some point, but we still finish the year at 8,000. I know that I can't time markets, But even if we get a bear market at some point in the future, it'll get bought up and it'll reverse to the up.
I just said I'm about to close the markets, and you guys are still arguing. It's good, though. It's fun debates. You got to do it. All right, folks, here we go. 30 seconds. This is going to be the last technical Tuesday of the year. I do have my big bell this time, so we will properly close the equity markets today. Thank you, everybody, for being here. Hopefully, everyone had a good day. What was the word of the day again? I promised myself I was going to remember. Proleptic or something? Proceptic? I forgot the word of the day, but it was a very good word of the day if I could remember what it meant. Tuesday, December 23rd, 4 p.m. The stock market is now closed. Had to go extra hard on that bell, bro. My mom's downstairs. She's got to hear it. She's got it. It's been a while since I rang the bell and made sure someone downstairs heard it. So had to make sure to ring that bell. There we go. 687.94 did not close at an all-time high, but we did hit an all-time high. 688.20. 688.20 was an all-time high on the S&P 500. We did achieve it today. 687.94 is where we closed. Pound share, 194 on the close. Nvidia, did we get 189? We got 189.20. 3% of the day. 189.20. Robinhood 120.24. That was down about 2%. Broadcom was up about 2.3%. Grab was down another 1.93% at 508. Tesla was down another 0.5% at 485 after hitting 498 yesterday. Rocket Lab, I mean, what more can you ask from Rocket Lab? It's holding its momentum, 77 a day after the insider sales, which took it down for 4 or 5%. I mean, if you bought that dip at 71, you're pretty happy. So Rocket Lab right there holding on to its excitement and premium valuation, even with some of the other space names getting hit on the day. AMD right there, 214. That was flat. S&P 687. Lockheed and Raytheon, those were flat. BMNR was down 4% because of Ethereum. SOFI basically flat on the day. Next Decade was flat. VG 6.5%. Not too bad for VG. Amazon got a little bit of a breakout from 229 to 232. That was up 1.62%. Meta, I think, got 664. That was up 0.5% on the day. And then the Googs got 314, up 1.38% on the day. Steve did buy Nebius today. He did indeed. He didn't buy VG yet. He's trolling with VG. He was live with Matt. Matt was like, so are you buying me? He had his freaking Schwab account out and like literally bought Nebius. And Matt was like, well, what about VG? And he's like, well, tomorrow's another day. So I don't know why he's trolling so much with VG, but he officially is in Nebius as this stock was down 3% on the day. He's still arguing with Chris. Of course, he's still arguing with Chris. All right, well, it's time to bring on someone who I think understands the technicals of the markets pretty well. And Steve just texted me. Yeah, we're still arguing. I can tell you someone I'm not going to argue with as I bring them onto the show, unless they say that Robinhood's going to like $50. Then we're going to have a little bit of an argument. But as long as they don't say that, ladies and gentlemen, it is once again time for the last time in 2025, last time, to roll the intro. Look at you. Is that a freaking...
Merry Christmas, dude.
You are all holidayed up today. You're Christmased out, dude.
Where are you? What's going on?
I'm at my parents' house for the I have purple curtains. If we were doing this downstairs, though, you would see like a tree and everything. There's nothing up here.
Oh, dude. No tree, no eggnog.
It's downstairs.
Does the milkman even have eggnog right now?
It's a good question. I don't even know if he likes it, to be honest. Are you actually drinking something, or is that just...
Why you got to put me on blast? Because I mean...
Dude.
So here we are.
Are you excited?
We made it.
End of your chart. Yeah. These are end of your chart.
Yeah. So do you want to do that?
So because next week it's I mean that Tuesday is not going to make any sense to do technicals because it'll be 2 days until the market closes. So I think, yeah, let's do it today to end out these charts for the year.
Yeah, we're good. I mean, rum chata is my mother's like favorite drink, by the way. In the spiced rum vodka, and then you throw a little cinnamon in there. I mean, I don't actually drink, but it's a thing.
Yeah, you don't. Yeah,
it's like Fireball whiskey, and the what's the creamy one?
Oh, I know
this. It's Fireball whiskey, and it's like the white whatever, and then you put cinnamon on it.
Yes.
But no, I don't actually drink. I am the designated bartender, though, because I was a very good drinker when I did drink. I never let a glass go unfinished, no matter who you were. But yeah, and I can make a mean cocktail and mocktail, whatever you want to call it. But
all right,
I'm ready.
I think what we should start off with today.
No Merry Christmas, nothing.
Oh, Merry Christmas, Happy Holidays. Now on to the technicals. Let's start off with Rocket Lab before we do the S&P and the broader. I mean, this has been story of the week, so I think let's start with that one, and then we'll get into all the other ones we got.
I mean, does the chat remember what I said last time?
I mean, you were, from what I remember, it was, when the hell can we get a dip to buy this thing? And that dip never came, unfortunately.
I mean, so I was looking through this and I was like going through the last TT. I was trying to find where the playlist was for Technical Tuesday, but
it might be unlisted.
It was Shempasta got it. Shempasta got it. There it is in the chat. But it was like triple digits, man. I'm looking at a triple digit stock. It is what it is. So this is a daily chart right now. I mean, Rocket Lab, we can't do like the annual charts because it's pretty new. But this big green stick is a 365 chart.
When you say we're looking at end of year charts, you're basically saying looking at the whole year performance, essentially.
Yep, as a chart. And we do this every year. And when we do it, it actually gives us a really good baseline to know exactly at what point these charts are going to turn the corner to the upside or the downside for the entire year. So it is a once a year thing. It's a very real thing. I'm going to start this timer now for the Lava Rockets. Here's the weekly chart. So this pullback, I mean, just first of all, those beautiful $38 like buys. My God, I was looking for a little bit deeper. But the last week it was in this 50 down to like around 50, but we didn't quite get there. We got to 52, holds the 50-day simple moving average. I have I don't know why the rest of these indicators are on here. Let me take some of this stuff off. Don't need NFP on these guys. And two things. One, I mean, this is the extension to 70. We get over 75, and that's a big deal. So I think we can get some pullbacks. What I'm going to do right now is I'm just going to take this area and lock this in from an extension perspective. And so this is the box that we're just getting out of on the Lava Rockets for some kind of consolidation, right? And we're over in strength, but really it's this prior all-time high. So this is important, 73.97. Does that have to hold? No, it really doesn't have to hold, but it's good to know. And if we pull back, we should pull back and have some kind of a retest. But the reason it was hundreds, and I'm just making this a little bit bigger for you, is because you guys see this looks okay, is that if this entire area here was to be a consolidation that Rocket Lab legitimately broke out of, if I just took this as a measured move, that is 110. So that's how I got to the hundreds, to a triple digit stock. And in this zone, as we were climbing, making the climb, I'm going to do another measured move here. If you're new to this by the way, this is trading, not investing. If you're new to the stream, what we do a lot is we want to be good bulls. And so to be a good bull, you have to know where the bears are. And in this area, this was that like halfway point of this consolidation. And we do this exercise quite a bit, which was if it can hold 55 from a 50% retracement area, we should at least see 61.51. But if we get over what I call the golden zone, which is different than a golden pocket, like a golden, is what I call the golden pocket, which is different than the golden zone, 61.50, we should see all-time highs or very close thereabouts. And that was just like an explosion through right up and over the 55 and change. The pullback here was pretty solid also. So from here to here, here to here, this is why I was looking for that 50 area. We didn't get there, but that's mega strength. It's just mega strength is what it is. So at this point, the pullback now can actually become, we're going to do it from this range. So first of all, it still can be that 58, but from this most recent right in here, 62s down as close to 60 as you can, which remains the same spot. And I know that would be really weird to feel or to see something like that happen on Rocket Lab, but here's what that would look like is that if this comes in, this is Amit's favorite, cup, handle, you get a little steamy. And no, so I would not be worried about a $60 pullback on the lab of rockets, because that's exactly what I would see. I'm a great artist, I know. Appreciate you guys for the applause. But lots of practice. But anyways, that's what we're looking at. So pullbacks here can be violent, but also I think as long as this trajectory holds, as close to 60 as you can, maybe even slightly below that, should be a buyable dip from here moving forward. And then again, if we can hold 70s, 75s through next year, that's just going to be intense for sure. Because this is going to be $100-something stock.
Are you worried at all about space trade getting overheated or anything like that? Or
yeah. So it would not take the whole year for this to happen. Clearly it wouldn't take the whole year. This would happen in the first half or quarter, maybe. And if that does happen, then yeah. So you would be looking at, let's say, a little something like this, right? You'd have a little blip in the radar like that. So that's what that first move would look like. That's about 110. At that point, best case scenario to me is sideways. You'd have to, again, be cautious of whatever the narrative is. I just ran out of time. But at that point, if you lose the 90s, yeah, you can see this pullback also. So, but between now and then, and quite frankly, listen, if this happens, then you're probably going to be looking at another sideways dip, and then you might be looking at a replica trade to do it one more time, right, into this 135. So that's like your best case scenario, and that's what we would call pathing for the chart. So something like this with a pullback somewhere in here to retest these highs. If we do get that giant pullback, this would be a base break retest and then rebound. But that's what this would look like, quite frankly, just like that. So at that point, would I be a little cautious? Yeah, I think that's a 40% drop. That would be prudent to be cautious, but probably not sell the whole thing. But that's what I would be looking at. This is what we are looking at in terms of the trajectory of Rocket Lab. It's a good looking chart, man. It's one of the better ones out there.
And even on a day where a lot of space names got hit,
this is holding.
Rocket Lab held up.
Yeah, I saw the same thing. Rocket Lab and ASTS both holding. ASTS not at all-time highs. So do you want to do this one real quick?
Yeah.
So it's same exercise here to here. This is going to all-time highs. Yeah, there it is. So same exercise. This is lagging Rocket Lab. So this is that bearish bearish golden pocket retest or retracement, the bears have to cover here. They have to cover. And you have a pretty heavy gap into 95. So at this point, I mean, hold your rocket lab, but this is ASTS becomes a catch-up trade. What? If you lose, so in this area, if you lose 81, you do have this to 75. So I would say as close to 75 as you can would be a better buy. But even then, you'd be looking at something like this, and it might take a while, but that is your trajectory, something like this. So chop is in play, but it doesn't have to chop because this could happen right here. So 83s is the top of that bearish retracement, which it's gone through at this point. You're just over here. I probably should have taken this. This is probably going to happen after Christmas, or I mean, it's super low liquidity environment. So what we're seeing right now, if you didn't notice, is very slow, but like grindy trades where it's like, it's just, you look at Nvidia today, it's slow, but it's like just a staircase up, like super slow. Whereas normally in normal market, it would be like, boom, we're done and we're in.
Right.
But if there's no bears to take it down, then that's what's going to happen in a low liquidity environment.
Okay, let's do the S&P. I mean, we technically did hit an all-time high 3 seconds before the bell closed. So how
nice. Let me just cap this off since I have a little bit of time. Also a triple digit stock. Yeah, because if this becomes the consolidation, good night.
I mean, it did hit 102 a while ago, right? So
yeah.
It touched triple digits before as well.
Yeah, so I would be in this 130 camp right here. All right, so we'll go to SPY. So last time when we were on SPY, it was like right into the area that we did pull back on. So we have a bullish structure break, meaning this was our downtrend. We broke through, and I was looking at, from a trend count perspective, looking at 685 here, having been a breach of the prior high. So this was a high here. This was actually the low. Can you do this? Oops, wrong one. Sorry. So high, low. This was a lower low. So this would be a lower low. And then over here, this would be a higher high. Not there. Here. Higher high. And then anyways, so we had I was all trying to make that clean. Lower low, higher high. So once we got this, I'm looking for the next higher low, which should be somewhere around this general area here. I turn on my trusty NFP setup, if you will, and I have this exact range right in here between 675 and 669, which ends up being exactly where we went, which is what we talked about last Tuesday. So here we are, making this like we're here. So we're almost at all-time highs. I have this general consolidation, and your Santa Claus rally. If we clock that should be about 1.3% on average. You got an 80% probability of hitting 1.3%, and my guess is there it is. That is 700 by the beginning of next year. And so that's assuming that we can get through all-time highs through the holidays. But that's what that looks like. And this entire box here, from here to here, becomes like one massive consolidation. If we hold, I heard you talking about, were you talking about 800 for next year?
Steve is thinking 8,000 for next year.
Well, I mean, I subscribe to all of this, but also with the pullback. But so I'm going to take this down. I have two. It's
The
about
average Wall Street analyst has 76.50.
Well, I mean, I'm pretty sure that we do better than most Wall Street analysts. I have 77.30 here for like a full doubling, just general range. So this is the breakout from this. If this ends up being a consolidation break, here's the consolidation. It's literally this simple, right in here, about 7.30. I think that you could do this, and you could see that 750, 770 range within March. And you'd be looking at a little something like this. Like you can have pullbacks in this area like this. Again, pathing. Just like that, to be about 770 by like the end of Q2, Q3, at which point, honestly, this is probably going to be where we start to stall out. And you'll know that if you lose 750. But I do think that we get to 750s, and then you can have this whole situation and come back into where we are, which honestly, I would be looking at something a little bit like this.
It's similar to what happened this year to an extent in February.
Is
March.
it?
Yeah.
So It'd be 770. Yeah, I'd be roughly 770. But that sets up for an epic buy, just so you know, into 2027 and beyond, to be massive rallies. And I mean, ginormous rallies. So the dip is still next year. It's probably right about here. If I take this at a 365-day candle, since this is the year end, the way this works, so this is going to be the end of year chart right here. This is going to be our 1 year candle. And we're coming off of a 1, 2, 3 year consolidation. If you guys didn't know, that's what this is right here. There's a 3 year consolidation right in this little box here. And so we are in year 2. I don't know where, by the way, I don't know where people are getting this 5 year bull market cycle. It's not. We're in year 2. What is that? Where's the 5 year thing coming from? And it's right here on the chart. So you're 1, 2 years in.
People are assuming we started bottom of 22, early 2023. So this would be 3 years.
No, that's not right. Because
2023 was a bull market.
No, it's not a breakout year. 2024 was.
We did have 23% returns.
Yeah, but that's only taking back what we did the year before, which was negative, pretty heavy 2022. So, I mean, it's right here, but it's here. This is your consolidation. This also takes me to 750 on this. And so 700 becomes kind of that, like that range. You know, these chart patterns, people say like those, what is it called? Like three soldiers, 3 black crows, 3 whatever. You would typically have a third that's gonna end up acting something like this. So this all takes me to around 750, roughly 740. But yeah, I mean, if you're counting 1, 2, 3, I don't count that because that's not a breakout. It is a good return, but it's not a breakout. And the retest was like pretty perfect both years. I mean, that's crazy. But this year is why we do these kind of annual charts. And so even if we have a pullback next year down to 609, that's going to be a dip buy at any point. Not that we would, but if we do, that's going to be kind of like your dip buy. You have this, and then you're up and to the right. And that is going to be at 695. So 695, boom, you're off and running. But you'll know how it's going as we get there, right? As the year goes on. So maybe you mark it, but right in here, this area from 610 to 685 or 585, if for whatever reason shit hits the fan, if for whatever reason, that's going to be your general dip buy area, which would be a big retracement. But I think we get here first, then you go sideways for a little bit, and if you do get that, you'll know when you lose 695 that it's going to be kind of a pain in the butt from there.
Okay. Tassie, almost 500 yesterday.
So I'm going to start every chart from here on out, if it has it, with the 365-day candle. Destination listed here. So it's sometimes TA is this simple. Look at this. I have lines from way back when.
That's crazy.
And isn't it?
Been analyzing this for years at this point.
So 415, remember I've talking about this all year long. Why is 415 such a big deal, right? It looks a lot cleaner now that you see it at 415. Why that was always such a big deal this year? It comes from this high, that high, and where as long as we've been holding 415, that's a good deal. Last year's high, 488. So the Tesla looks like it's in a good move. It's going, like, to me, it's always been in this range. But again, mark this high. It's 488.58, whatever that was. That was last year's high, not this year, but it'll be 2024. And if we can trend over that moving forward in 2026, this whole thing is going to be a massive breakout, right? And we say a massive breakout. So this is your consolidation range here. Your extension takes me to right over here from a 1, 2, 3 year breakout, which we're in a 3 year breakout as long as we've been holding 415. Now I'll drop it down to a chart that most people look at. It's right here. One more time. Here's a monthly. Same situation. I'll drop it down again to a weekly. Here we are, 48. So that was, again, last year's December 17th peak, I think it was, right? Where Tesla began to sell off.
488.54. Yep.
It's very possible still that this is just a second try. So we have 1, 2 tries. We could come down, have a third try that gets slapped. And then any pullback on that third try will likely be a buy for me if we get that. But for now, I think this is still like well on its way. It bucks the trend, but Tesla does not like to share the spotlight, meaning that like if the rest of the market is moving, Tesla doesn't like to go. Sorry, I forgot to start the time clock. I'm not going to redo it. And again, I'll just take it from this consolidation here. That's how this box came through. So it's just from this most recent consolidation right here that I'm getting the 6s, which we haven't quite broken out of yet. Again, it looks really good. I'll drop this down one more time. But it remains to be this 415 area that is just so crucial for the foreseeable future on Tesla. So now I'm on let me go down multiple drops, and we'll go down to a 30-minute chart here on Tesla. Let me get this stupid gray box off. And we'll look at some intraday charts. So again, we have like really what we call like high and tight consolidation right over here. It wasn't last night, but the night before, we have a little bit of what I would call a session gap. This is constructive one more time. So we have a little session gap right here. Look at today's low. That's 483. So this thing continues to make new highs and higher lows. It is in a very tight consolidation. I don't know that this is one that you would front run, if you will. So that's your consolidation. The broad trend, uptrend, is still like very much intact, which it has been for quite a while. Right over here. This is when Amit got the, I think it was right over here. Probably over here. No, I don't know when you got the text. Oh, that's not the.
I think
that's the most recent uptrend. I'm sorry, not the broad uptrend. That's the most recent one right here. But the broad uptrend is, I have to do it on daily.
Do you think that not getting 500 was bearish, or do you think it's just a stair step up as you're?
It's just a psychological level. I mean, I have a little bit higher than that right now. Sorry, guys, I'm off on the clock a little bit, but anyways, this is when, yeah, okay. Now I'm like, this is when Amit got his text, but he ignores it. He doesn't like text messages. I don't know. That's the brought up trend. We're here. We're testing it. We're not closing over it. So that's the biggest thing for me, is that we're getting intraday kind of pushes through. So this red line is that absolute peak. We don't have like an individual close like really over it. We have a couple closes on it here, rejecting. So that 488, which is the level I was talking about for the big move, that's what we want to see. Is we want to see some kind of consolidation up and over it. And I'd probably say 495 just to be safe, right over here, which is that value area we call value area, high up in here over yesterday's fair value. So, I mean, all of this to me is fine. We kind of just showed that little consolidation. It's not a big support level. It's really not. The lower end here is 479s. But a pullback into 450, if that happens, is probably actually gonna be pretty decent. But here now, again, it's back in that consolidation. That's bed in. And even when this was breaking, before when we had this Tesla chart, and it was this consolidation, that's what we're breaking out of right now. So from here, and then you got that first little press and you got two retests right around 460. Everything looks good on Tesla. And then if you take this from the 490, again, I have this up to 520, 540s right here, but ultimate next level just under 6s, and with swing targets for the year up in this higher 650 plus area. And I mean, again, same thing there. If Tesla can do this for the next 2 or 3 years, this is going to be still active breakout just based on what we were just looking at. Again, why these annual charts become a big deal. That's active breakout. I mean, active breakout, long term.
And that's like a 4-year consolidated breakout, essentially.
Mm-hmm. Yeah, that's literally just starting.
Yeah.
I mean, just now starting. So while you might think that Tesla, and this is why Tesla is one of like a larger position for me. Like, again, while you might think Tesla is a come a long way, that's Tesla. It's got massive potential here. Massive potential. All right.
Okay. By the way, thank you, Derek, for the 50 gifted. Appreciate that, especially around the holidays. So thank you, Mr. Derek Wall, for the gifted 50. 50 of you guys just got memberships because of Derek. Let's do one of Derek's favorites, which also tried to reclaim 190 today. NVIDIA.
190. Oh, Nvidia. Well, Jensen's bringing Christmas back.
Jensen is Santa.
Did you see my post? You did see my post.
I did see your post.
The post is fun. I actually got a pretty quick meme on that one today. But
I'll show it right here. Oh, you're showing it. Okay. Jensen's the closest thing we've had to Santa all year, right?
Yeah. Forget the Santa Claus rally. Like, really legitimately forget the Santa Claus rally. But Jensen is bringing Christmas back. He's bringing the gifts this year. But this is going to be one of the bigger catch-up trades of the year. Or of the year end. And I'm trying to find this Nvidia chart. All my memes were just like nothing to do. We're at our levels. We need to go. Anyways, I can't find it right now. But yeah, this was our support area right in here. I mean, this thing is held perfectly, exactly how it's supposed to. It just, it's people's time horizon. Like, are you impatient or whatever? This 180 and change value area right here, it's a big deal. And we do have multiple, what we're going to call like inefficiencies in the market to fill. So I'll go ahead and walk you through those right now and just kind of get the play-by-play on Tessie as I see it at the moment. So here's our broad consolidation at the highs. This general area is a massive support base. Can it continue right here, right now, and keep going? It can, but I don't think it has to. With low liquidity environments, this is the exact situation that it can just absolutely continue to go through. There are a handful of spots on this chart. Now, I know I'm not in live, or I'm in live mode, but I want to look at here, 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 and here. So these are the major spots. These are the major tops. And when I do this, what I'm looking for, I'm on a 30-minute chart right now, I'm going to look for something called, I'm going to look for that inefficiency, right? And you could call them what you want. The predominant name right now is called a fair value gap, right? And so what that is, it's just that general area from here to here where you have a very large candle that is like a illiquid moment, right? We had one, we still have one up here. So I'm going to mark all of these. And I think as we get through them, then you'll start to see this is the kind of like iteration of Nvidia. This is actually a hard session gap right there. And then we have another hard session gap up here like this. And then we have something called a fair value right here. So it's been trying to fill this upper session gap this entire time, quite frankly. So now that I have all these levels marked out, 209 down to 189 is what we're dealing with. This is one that we just recently got through, right? So if I was doing the same kind of exercise, there's this little blip on the radar right here, but this is, I mean, you guys know this is a massive pivot. We get up to one right here, and we literally stopped like to the penny right there. If I do the same kind of thing, it can pull back, is my point here. You have this area. It can pull back just like it does over here. And then as long as we can hold a basic pullback moving forward, it should continue on. And really, if you get a close over, which we're not quite there, like you hit 190, boom, it's off into the off to the races. But so right now it's 189. The pullback is just this like basic area here. And so I think right now, even though this is low liquidity, I don't know that you're going to get a pullback is where I'm kind of going with this. So this pullback can be as high as 185, and that's going to be right here. So see this little blip on the radar here, and all of this general area right here. So if 185 can hold, which has always been that key level, I think even a $5 pullback on Nvidia is perfectly fine. Like this, I don't think it has to do that. But if you get a close over that 189.15 right here, you should quickly see 195 to fill this next inefficiency in the market. And then we kind of do the same thing one more time, right? And so we can have this like pullback, you get a close over 195.15, boom, not 200, 199.70, and then you do it one more time to 206, which is the real session gap. And if that whole thing goes and plays out over the next coming month or so, what ends up happening is that you have a very large consolidation. What I'll do one more. So I just ran out of time, but here's where we are. That 195 area is going to be a big deal. So if we can get over that 195, then what happens is that this entire range from here to here ends up being a new consolidation range. And we're looking at, I think you had 220s, something like that, yep. 250s. But that is the trajectory. That's how it has to go, step by step, play by play. and your first stop is going to be 230 right here, 235s. But yeah, you're on the mend. It's time horizon here because this is a large chart, like large time frame. This is a large mega cap stock. I don't even know how many trillions of market cap is this at this point?
I think we are
4 trillion.
4.7 today.
Yeah. So what's a $5 trillion market cap?
203.
203. So expect 195 to 203 to be that pretty heavy chop range, which ends up being right in here. That is that 206 right here. So I like that. I think this 195 is kind of a predetermined situation. Again, this is a bearish retracement, this middle one. We'll take that down. But this in here is a bearish retracement right there. So if you're holding that 197, which is this little area, you're going. And your trading ranges become here and then here. But if you cannot get through, expect some consolidation to that 190, which we're not even at yet. And then something like this to be how that ends up working out. And then again, another little consolidation in this box right there, which is going to be your resistance before we're actually talking about a breakout, because we're not quite yet. But this is the step-by-step play-by-play. All right. Helpful? Someone just
Very
said,
helpful. Ethereum.
my concern is it inflation data. Did you go over GDP?
Yeah. Well,
I mean,
I think
GDP
their argument is that GDP means, yeah, which means we might not get the rate cut next year.
Is he glitching for you guys or just me? Or am I glitching for you?
No, I am glitching a little bit. No, it might be me. I don't know.
Call
It
mom.
might be me.
We need new.
Hopefully it's not. But
We need a Starlink.
can you hear me now?
I hear you. All right. So what was it? Ethereum?
Okay. I was saying the person's probably making the argument. Yeah, there's a little delay. That's the issue. I was saying they're probably making the argument that inflation could accelerate with no rate cuts because GDP is so hot. That could be the issue. Macro.
It could, but that's not bearish. As long as GDP and inflation are equivalent, it's not bearish. So it's all good. What I would say is that if you watch that GDP level, or that we're like 4 point something was like a heavy print. I don't know. That's probably not going to stay. But if GDP, what we're looking for, what the market's looking for is for AI to have some kind of like miracle boom in GDP, actual productivity boom, which is what's in question across the market right now, which is kind of why you're seeing gold, in my mind, continue to push highs. But if GDP has like some kind of miracle explosion due to which will only be due to AI, yeah, that's what they're going to see. But it might not show up in Nvidia first. It'll show up in the smaller companies, the companies that are spending money on AI, and if they're actually getting some ROI out of their AI, then that's going to flip the script across the board, and all the naysayers are going to have to cover, and they're just going to be out of money. And in that moment, that's when it's just going to be like, oh, this was dumb. This whole thing was dumb. We're just going higher. GDP can go higher. Inflation can go a little bit higher, but stay sticky for longer. Rates can stay higher for longer, all of that stuff, and it's all sustainable. And in the meantime, during that situation, the Fed will actually do pretty well. The government, if you will, like with inflation going high, it's going to offset a lot of the debt. And eventually that's going to be the situation. And then you're at Goldilocks. So Ethereum here now. Look,
real quick, you can reset the timer on this one. But before you do that as well, Tim Cook just bought $3 million of Nike.
I knew it. What's his track record though? I don't know if his track record's any good or not. Maybe Apple and Nike have a little setup.
Maybe.
Maybe.
I didn't even know he was an
Maybe.
insider, but I guess he's an insider at the company.
I mean,
All right, Ethereum.
well, that's interesting. All right, so Ethereum. So this is I found the chart. This is funny to me, but like where we were coming off of these basic levels here, you know, the bear calls for backup, whatever. Here at 3,000, they called for backup. They came. We didn't quite get to like that full blown bear squad mobilization at 35 or what have you, which would have been heavy resistance. We'll just do this. So people, I've seen so many people be like, oh, what are you doing TA on crypto for? Like, you guys, crypto is like the most technical asset out there. It is literally the embodiment of supply and demand. So if you don't do technicals on crypto, you're missing it. And all this shenanigans, by the way, right now, and I'm just going to rant, is like, dude, people having a hard time about Ethereum doing what it's doing. You're noobs, you're rookie. Take a chill pill, sit down. You don't know what's going on. This is normal. This is totally normal. But yeah, just relax. Like this is exactly how it goes. Like all the time, this is how it's gone for the last 5+ years. You know, just relax. This is in consolidation, just like it was. And I don't see it going anywhere until we're over 35. Now, last Thanksgiving, you guys, I'm talking to the audience now, everybody had an opportunity to go home and tell their families how great of an opportunity Ethereum might be. You did okay. It's not going to be about Christmas or New Year specifically, but after that time frame, we're going to see what the last shot was, right? Does this continue on? But usually, you'll have just more consolidation. I'll tell you now on the charts, it's not until it's like considerably higher that we're even talking about a breakout. But we've been looking at this massive consolidation for months now. And this is exactly what I'm thinking is going to happen. And so far, exactly what has happened, right? So yes, this buy is off the lows here. That was a good dip. We're still well inside the box. You're a decent hold, but you're not breaking out, right? And that's not going to show up until maybe post holidays, or we'll see. Like if people start buying it here now, no. I heard this shenanigans about what was it? Tom Lee's like people getting upset. I only said what I said just now because of what I saw about people getting upset of Tom Lee's like base case low. Guys, that is the low. Like that's the lowest point. That's what it's always been. It's been that same point. It's right here. It's 1880 and 18, whatever it is. It's literally 1850. So can we hit 1850? Yes. 100%, right? And that's if 27s right here, 2750 doesn't hold. So what we're dealing with is this last area of consolidation right over here, trying to act as support. And that's a massive consolidation. And the entry right in there was right over here. So below 2850, it's got to hold 27s from here, and you have some kind of consolidation. But the broader uptrend consolidation, look, that's going to be a while, right? And it's not until you're over 35 that you're out of this near-term consolidation that you can really even start talking about like bigger moves. Because even then, what I would say is that you have this most recent top. So you have 1, 2, 3. This is technically the fourth press, right? 1, 2, 3, which means to me that the dip is buyable in this area, this was a measured dip right there. And this thing should do this. So over 35, you're going to get to 4, and then you're going to have this consolidation. and it's going to be another long one. And then you're going to get over 4, and then it's like boomtown. Then it's boomtown. In the meantime, if you lose this 27 general area, yeah, you should expect probably sub 2K as low as 1850. But we're not there yet. And that, quite frankly, is totally typical. That's how Ethereum does. And if you really want to watch some of the like lower cap tokens, if you will, see when those start lifting. Because right now, those lower cap ones, they're at the lows. Like they're literally at the lows. Like my one moonshot bet is still at the lows. So this is not telling me that it's time to go yet, but it's telling me that we're near the bottoms. Anyways, so I think consolidation. I don't mean Solana. I haven't even looked at Solana anytime recently.
I think your point about Ethereum also is well taken, because 1800 has been a key level for a while, right?
Yeah.
So that the fact that they're calling that out is not that surprising.
No, right. And so here, Solana, you got to get over 150 again. It's got to be done. Otherwise, the bottom of this consolidation is probably like 107 and retesting here and here. So I don't have 80s necessarily. I have 77 area right over here, but right here, right now, this is a retest of this zone here. That's Solana. So, okay. But the charts aren't ultra bullish, and I don't care what the fundamental story is. You got to look at the chart, because it does not matter what the fundamentals say on crypto. It matters what the charts say way more than anything else. And when they're ready, it's going to be obvious, because they're just not going to stop. And yeah, you might have to chase when it's finally time. But here now, this is how it was supposed to be. You're in the consolidation range. It's a little bear flaggy, if you will, like bear flaggy, like it's pop, drop. We're not holding that 30, 31, but you're right where a squeeze would happen. The squeeze is pending. It hasn't decided which direction yet. If it gets over 31 again, boom, it's 35s. If it's over 35s, it's in the 4,000s. But so expect chop.
BMNR is the same thing, basically. Expect chop until you see ETH go up or down.
Yeah, apparently there's some vote right now on his pay package. Is that a thing?
I don't know if it's pay package. I mean, that might be included in the proxy vote, but I believe it's about dilution more. Yeah,
so it's worse than Ethereum in this sense, because there's other things that you have to pay attention to. Where Ethereum, I don't have to pay attention to fundamentals. I do, but like it's the charts mostly. BMNR, it could be something totally different. I don't like it, right? Like it's on the level. I sold a bunch up here, 41s. I mean, I don't like it. If it's over 31, it's a little bit better, but this is too deep for a typical pullback. I think it's just having like so I'll drop down a little bit and zoom in. You have a little like session gap here that's held 29. So if 29 does not hold, I really don't like it, like at all. So that's the lowest. This is the lowest that I would possibly consider continuing to hodl on this guy, but that's it. And it's not going to be in a buy area unless you're holding over 33 for me. Because if you are, so right here, basically I'll pass. But if it's holding over 33, cool. I know that I have this to 38 one more time as a tradable range. And then I could hope for some kind of consolidation like this, which those are those levels, 35. And I have that same logic in terms of we have an inefficiency up around 38 and a half. Well, I just call it a fair value, but that's how these things, this we'll call a price of interest here, 35.79. So I can see this, but this pivot point, which is a measured move also, That's 50% from swing low, this most recent swing low to that swing high. It's got to be back over that to be bullish, because otherwise this is not a bullish pullback here. It's a risky, it's more risky than not. Like if I see 30 reject, it's just, I got to wait here. So here, patient, no dip buys, have like partial positions if that, but over 30, whatever that is, 33 and a half, much better. I'll expect this move to 38, which is a good trade. Here, 15% on equity that I expect to pull back. And when that pullback happens, I want to see this 35 area act as support right over here. And if I don't, then I know I'm in more trouble for something like this, like all the way back, which is going to be kind of painful of just a waiting game. And I don't want it to turn into MSTR on me, which hasn't bounced yet. It looked okay, but it's not happening yet. All right. But I think the story on
before we do Bitcoin real quick, go
falling knife.
Just give it a couple seconds, Jason, because there's a weird delay. Yeah, just give it a couple. I don't know why there's a delay today, but thank you, Go Falling Knife, for the $200 super chat. Really, really appreciate that. And thank you for being here as well. And again, Derek, thank you for the 50 gifted. So thank you guys for the super chats. Yeah, Bitcoin, I guess I'm assuming you're having the same opinion with ETH, which is it's choppy until it actually shows you an uptrend or downtrend.
Yeah, I don't want to front run this. There's no reason to. Like the Ethereum dip buy was pretty tactical and technical on the last one for me. And it was like a 30% bounce. Bitcoin was not as juicy, if you will. Like it wasn't, I didn't have the same kind of feeling on Bitcoin that I wanted to buy that bounce. It just wasn't as discounted. That said, Bitcoin's not going to become as discounted as the rest. It's just not. It just won't. It will probably be Bitcoin that shows up first, though. And so, like, when Bitcoin does get back over the 20 comfortably, and really the 50, because this 20 and 50-day SMA, these are going to get real tight, like real tight. So, I mean, this can happen. And then you'd have a boom, like you're up and to the right. But that's this 90K level. It's another psychological kind of level. It comes from here, which was the prior support and then resistance right here. So it really needs to hold over that, like constructively, like a weekly hold. Otherwise, and even then, so the thing about Bitcoin, even then, is that if it bounces and then it gets stuck at 109, which is exactly what I think is going to happen, that's not going to be fun either. So for those reasons, I'm like, yeah, we'll have to see. The broad trend, I have a couple on Bitcoin, is just kind of like widening. So, if I took just the last two, when you lost that was no fun. I'll go from here to here. So if I this is like a magnet tool. So if I just connect this 2023 low to this 2024 low, it is right here, right now, that you would expect it to start bouncing. But I think you need to give it some time. Again, this is a weekly chart. I don't mind it. It's just going to be pretty clear, like over 90 and change, like from a weekly perspective. I don't think I have anything close to that. And if not, well, then the pullback is in the 70s, which is what I was saying. I would be more of a buyer, sub 70, something like this, to have this kind of move, which might not be for a long, long time. So we'll see. It can either do that or it can happen right now. But again, if that happens right now, yeah, you're gonna get what we call a trigger. We have to have a trigger. Can't just like anticipate yet.
Do you believe 200K is possible by end of January?
No.
Okay.
No. I think you get to 109 and you hit your head again. I think it's this. I think it's literally that. Because you have to get, like, if we were over 109 right now and you asked me something like that and we had like good sentiment, maybe, right? He's at 200K. Where's the oh no, how come I can't see the market cap?
It's like 2.2 trillion. What is Bitcoin's market cap?
Bitcoin's return is super minimal. Like,
well, 1.75 trillion.
Okay. So you're talking about a $5 trillion market cap Bitcoin, which is the size of Nvidia. I mean, many years down the road, for sure.
I'm only asking because there's a lot of projections that are out there.
Nah, but they're liked by the not legitimate, like super speculative, mostly wrong people, right? I'm asking for a friend.
Probably. I don't see 200 either. I mean, it's tough to imagine that.
Not even kind of. 178 has always been kind of like that max peak, which is okay, but you got to get through this first. I think you're going to get a bounce, but the bounce can lock a lower high. And again, crypto is very technical. It could bounce all the way up to 120 and still lock a lower high. If it does, the best case you would have is something like this. And then you have that. That's like best case, which is at 160. 178 is maximum for the remainder of this move.
So do you think MSTR is even worth looking at here at these levels? Or
I'll switch to MSTR. So MSTR is, I think it's worth looking at, for sure. We have a lot of general confluence over here, but so MSTR, we'll go to my annual chart. Yeah. So what is this? 330.
Dude, this has been a disaster all year.
Well, it changed the model multiple times. So, so the model, like when they release like all the different assets, like it split. I think got a little bit confusing for a lot of people. So if it's over 218, I think you could get a bounce and retest into 218, right? So that's that, and that could come down as low as 130s, honestly. But let's say you're something like this, worst case scenario, which is not that much of a downside. This is tradable to 215. But what I will say is, like, it's got to be the 215 or 220 area bounce. I don't know what just happened to my arrow. This is, and I just dropped down to 30. This is resistance. So it's got to hold the 20-day right now. And if it can, then I think you get that 220 to 230 bounce right over here. That's resistance. I mean, that's what it is, right? And right now, you're entering this support zone right here. So I have the same level. So the max drawdown is like 130. This area is okay, but I think that's what you're looking at. Is if this wasn't going to hold 167, which is right in here, this top 167 and change, 165s, which we're not. Yeah, it can go deeper all the way down to the bottom of this channel here, which is in this area. which is the bottom of that support. But again, this is a different asset now than it was over here because of all those splits and all the different equities, and they're not like compounding growth here because they're paying it out in other equities. So it gets a little, for lack of a better term, kludgy, confusing, whatever you want to call it, as to where that compounding effect is going. Not that it's not happening, but like you have it paying out a lot. So it's way more directly tied to the price of Bitcoin itself than it was before. So Bitcoin has to appreciate. Otherwise, they're kind of like paying out.
Okay. Amazon.
Also, I'm not an MSTR expert, so if I misspeak on any of that, apologies. But that's from a non-expert person. That's what it feels like. But what ticker did you say?
Amazon.
Oh, let me take a.
By the way, while you're drinking, I think I should be the Fed chair because I have a tool to.
Oh God! What is happening,
dude? I'm like on my mom's desk and she has all this like stuff. I don't have any of this. I don't have scissors on my desk. I'm like, yo, scissors.
Look, I have a screwdriver. Wait. And crescent wrench.
I have scissors. I don't have any pens at home. There's some pens.
I do have a honey.
Bro. Okay, so you drink honey when you're sick, right? You also
I put it in the tea. Which
you need to put the honey in the tea to help you when you're sick. And when you're sick, you also need a little bit of decreased volatility, which is why I have Vicks right here.
Vicks, nice.
You know
I know what you're saying.
All these like new devices I'm finding on the table.
I'm looking for, what do I have? I have cough drops.
So much shit.
Oh God. As a trader, though, you really need your Adderall.
You definitely need that.
Oh God.
Dude, they shouldn't leave me around scissors, bro. I'm like a little kid, bro, playing with scissors. Like I don't have this in my office. All right, Amazon. What are we thinking?
Amazon. So we're gonna go to the annual charts. Take off all the stuff. I mean, you tell me. Does this look like a good annual chart?
I just feel it looks like it's coiled up for next year.
Oh yeah. No, this is good. So even here to here, oops, wrong button. Yeah, this looks good. I had this from before. But here to here, extension, how I have always gotten 350. I think this is you keep this in the arsenal. So 258 is like a 50% extension. You guys like looking at annual charts? Look at this.
It looks like the chart of a bookstore.
Does it?
That's all they do. They sell books. That's it.
Yeah, you're at a 50% extension here now. Like at that 256, that's what that was. And then this pullback is like pretty picture perfect. But that remains this 295, then 365, then 4 for like your multi-year kind of view. So I'll drop this down to a monthly chart. 2021 all-time highs, pretty picture perfect retest. Here we are, 242, like 14. Again, this prior high, it's crazy how this stuff lines up. This is perfectly fine for me. I'll drop down again. Here's our weekly. So we're looking at this consolidation. I think we see 242, which is just this very simple. This is how my charts always like progress, by the way, is from this, like this same view. And here's our current like downtrend pullback. So here we have actually come back over. And so what I'll do one more time is I'm going to take from here to here, which is that most recent post earnings pullback, and say, look, the setup now is that we still make this trek into 237. From an annual perspective, yes, we keep this on. We keep this on. There's no question that you don't have this. We still have to get through, just like we hit our head on this one time before. We can have that. We can have some kind of consolidation in here, but over 237, it's like a foregone conclusion that we're going to 245, and over 245, also a big move into that 250 range, and like Q2, Q3, whatever. Amazon is going to be one to watch for next year, big time, because for sure we have a $300 target that's on deck for next year, 295s. And I'll just throw some of our basic SMAs on here. Right now, we are also just now getting over like all of our major SMAs down here. So 230, nice to see. We should be on our way to 235, at which point we should expect a little bit of overhead like resistance. Maybe we battle with that for a little while, and then the next push is straight into 243. And if you could ever get through 243, I say ever, we have a lot of overhead moves to make, and this becomes that general consolidation area. But the key levels here is between 237 and 243. It's like a $5 range. And if we can get through that $5 range, which we're in process of heading up towards right now, slowly but surely, if we can get over that like this, that's the bear zone. So the bears aren't even around really until 243. And if we get through that, it's like a foregone conclusion that this whole thing becomes a general consolidation, which gives me, again, it lines me up here to say this is consolidation. We should be able to double that, and boom, one more time, there's my 300 number right in here, 295 to 300. And so, yeah, that's the target for next year, assuming Bezos doesn't have to buy another yacht or something like that, or sell all his shares for, I don't know, Blue Origin. But yes, we stay the course. There's no question in my mind here. Even if this pulls back one more time, it's still fine, right? But from a trading perspective, those are your levels. It's up. We're making the trek into 237. That's going to be target acquired. Then you have a $5 push, but the big breakout is going to start over 245s, give or take. And then it's just then, not before then, but once you get there, then it becomes like this foregone conclusion that this whole thing is a big, massive consolidation. Because again, and I just ran out of time over time, what is this? I mean, this is that multi-phased consolidation. This is the breakout from 2020 to 2022 low. That's what this target is. And if we're over that 258, it's happening. It's happening. It's what it is. That's a pretty straight shot. And it's going to be one of those moments where you look back on this chart and it's going to be like, oh, this just happens to be one of those consolidation moments in the chart of Amazon, not too dissimilar to what's happened before, right? Or even nearer term here, where it was just waiting before it went parabolic on you. So that's my Amazon chart.
And we also know when Amazon does make a move, people are going to chase so hard.
Exactly. Yeah.
Everyone's going to be like, oh,
it's going to be Google. Google already did it. Apple already did it. We'll do Google. We'll buy Apple again in June of next year, not before. That's when I'll buy it. I mean, it looks frozen again. But in the meantime, the Amazon, probably Microsoft can start to catch up. Next.
Okay, I think I'm back. I was just saying, when Amazon does make a move, people are gonna chase it. Because
it's gonna be Google 2.0.
Yeah, 100%.
And it's always been like a discounted rate. Whenever Amazon's cheaper than Google, I tend to buy it. historically. We don't know if it's going to stay the same way forever, but we'll see. I'm going to move off my rum chata for a minute. Sorry.
Palantir.
Oh. This is looking spicy, bro. What are we doing here? How come Hoodie didn't catch the bid too, by the way, when Palantir was moving? What's
kind
up
of
with
crazy,
that?
right? Like Palantir
I thought these things were supposed to be buddies.
Palantir pretty much got back to all-time highs. Hood did not.
Yet.
Well, we got 8 days left of the year. I mean, I don't know.
Oh, for the year?
Yeah, for the year. I mean, for the year, Palantir pretty much got back.
Okay.
Yeah.
Fair. But you're here. So this is from swing high after market hours on to swing low. This is it, brother. This is that bearish retracement right there. So caution is warranted in this moment of time. That's all I'll say. If you cannot hold, then the pullbacks here are to 185. If Palantir pulls back to 185 and holds, that's going to be bullish as hell. It's like, that's going to be super bullish. But over 196, like multi closes, we have a very clean, like intraday gap to 205, which honestly I think is what's happening right now. As it does this little chop fest, any pullbacks as close to 185 as you can, I think are buyable. Does it have to do that? It doesn't have to do that. You'll know if it's closing over 196.30, and then it's not going to do that most likely, closing over. And if that happens, then this is your first trajectory right there, near instantly, and you are probably going to get your 200-ish, 213 level, at which point this becomes another kind of chop zone in here, like this. And if you get up there, you just want it to hold 213. Generally speaking, you want Palantir to chop around really sideways in this area for a while before it can make another move, which would be to the 236s. So that's what I have on my Palantir setup for next year. But yeah, 185s. Yeah, for right now, this is bullish. We'll just look at this really quick. Yeah, I mean that's what it has to be. I can't do much with an annual chart there, just because we're such a breakout year on Palantir, such a breakout year. But if you lose 185, we're back in consolidation.
SOFI.
So this is where an annual chart will be a thing. Here we are on SOFI. 1, 2, 3, 4, 5, 6 years. 28.35. 28.35. Pretty clean, right? I think I have it as a red line. Move this over. That is your breakout area. Between then and now, you're kind of just, well, this is, I haven't seen our broadening formation, our broadening range on SOFI for a while, but there it is. I think you're just chopping up here. So you're at this more recent support. And I got to change the setting on this for just a minute. Okay. But it's 28.25. 28.25, you guys can see where it's coming from. It's this prior all-time high over here. You're kind of just consolidating. You're sitting at this like value area low, which is down here, 25s. And the dip buys have been around 24. I think you just let this play out as it is right now. It's definitely a little overheated. But if you like it, you're probably going to be fine with it. You have a couple like double top, lower high, you have a lower low, you have another lower high setting up right now. So this can go sideways for a minute. I don't know what his KPIs are or whatever. And regardless of that, this is where we are. So sideways price action, dip bias is close to 24 remain. It's not in breakout mode until you're like holding over 29s. But
this has been in a tight range over the past, basically since August. It's been between 24 and 32 essentially.
Yeah, I'm just zooming in a little bit. I mean, you could get a bounce, but the range is pretty tight, generally speaking. So it's 27.41. I just got this from this whatever breakdown that was. And the downside current support from the 24s, the next higher support is around like 26.5. But you're getting super granular. Like, do you really care about this 26.5 versus 24? I don't think it should matter on SOFI, and that's this general area. So it's 27.5. If you're getting really strong closes above that, this is another one of those fair values. It looks okay, but I think it's consolidation. It's the second that you get that 27.5 close and then subsequent open above with the small push early, then it's like boom, you're off. And you're off likely to 29.5, 29.25 right here. At which point, again, you have to be a little cautious because 29.25, that's potentially a lower high, one more lower high. And so the best case scenario in this situation is you expect that to go into a consolidation mode. Not best case, but that's the real case. Like really, you would expect this. If this ends up being a higher low, then you can get up to something like this. And then you want to see that 28.5 or a quarter, whatever, hold and expect this consolidation. And it's this. So those are your trading ranges really. So here, and then you have a small one here. This as a trader, no, I don't want to play in that. That's consolidation. As an investor, you stay the course. It's still in no touch anymore. Like you could have bought it once in this general area, which I think is fine. This dip buy, but that's it for right now. Then you let it play out. Let the chart walk this trend and see if it can continue on this trajectory. And if it does, this is exactly what you should expect right here.
By the way, Path is up 4%. They're joining the S&P mid caps, so that's why that stock is up 4% after hours. Meta, what are you thinking about this one?
I mean, definitely goes in the next year trade, 100%. So this probably becomes a real position at this point. This is SOFI. Oh, Meta. Okay, so cleaning up just a little bit. Here's last year's high. Let me just make a quick line right there. 638. Just mark that line in the sand at 638. As long as Meta is trending over 638 next year, this is good. This is golden. I mean, that's just what it is. You're currently in, again, year 2 of this breakout. As I move this over, that's the line that I just put there. Look at this, like, I mean, it's pretty solid. You're holding over. The death cross, the buy from the death cross, I mean, look at this death cross. The buys end up working one more time. It's so funny how that ends up happening. But can it be a little choppy? Absolutely. What I would say from here is that if we take from this area to that area, right in here, 670 is the current resistance zone, right? But if you can get over the 670, we absolutely get straight in. And this is Chris's trade, which we highlighted a while ago. You absolutely get this move. And that's going to be at the next time that happens, that's going to be over the 200-day simple. So it should get a pretty significant move through. And you have a couple levels up here to get through. So I would say, though, that there's a bit of resistance here, 720. And then I'll pull this all the way from over here. So I think you get this. So you get from here to 690, 690, straight into 720. Do not pass go. Do not collect $200. That goes straight into there. That's the bearish retracement. Then you got to take measures. So that's 720 from here. As long as this general consolidation and pathing continues to hold, but that breakout has to happen. It's like a little. You're basically up here and you're holding this, like this consolidation up here. So that's what you're looking for. And as long as these general lows hold, you're happy. I mean, look at this 638. So that we're over 638. That as long as we're over 638 for Meta for the year, this is what's happening. You just have to be patient with it. But if you lose this level, that's where it gets rough. So it's a pretty clean switch that gets flipped on Meta. But this was that golden pocket pullback retest that we measured before. 595 is it. That's it. Any pullback from here is fine as long as it's holding. To me, it was that 634, but 638 happens to be the annual number. I think this general area right over here is the new support right here. So that's what will be the new support if we don't get through. Let's say if we get up and do this, that same area in here is still the new support. And then you have to get through 690 and then you're boom, straight into 720s. And then if you get through 720s, this is pretty immediate also. And you're talking about all-time highs and you're talking about a $1,200 stock in 2028 is what you're talking about. Just from this consolidation up through, that's 1,000. So 2027, 1,000 price target, Meta is what I would put this at right there. And you could be looking at this in 2028.
Okay. Let's do Robinhood.
That was perfect.
We have a new stat on Robinhood as well. Robinhood Banking has officially rolled out. 10,000 customers have deposited over 100 million to date. They just posted that on X right now. So what do you think of Hood at the moment?
I mean, I love Hoodie.
Oh, before we get into the TA, do we want to talk about the hedge that we both, I mean, I told people last week that you gave me the idea for it, but you want to give a quick TLDR on kind of why selling in the money calls made sense on Hoodie here?
Hoodie, Tesla, a handful of names. Well, multiple reasons. Like, first of all, cover calls, if you guys don't know, here, I'll stop the share for a second. Turn my share off for a second. Cover calls, like if you don't know, look, that's for premium. That's for like income generation. If you have a stock that's potentially at risk, you're really not sure, or really in Amit's case or other people's case, if you're oversized and you need to take some kind of profits, there was multiple reasons why this made sense. One, from a tax perspective, two, from an exit strategy perspective, and three, from a protection perspective. So for those reasons, selling in the money cover calls is what you would want to do if you find yourself in that general position. Selling $100, like $150 upside 45 DTE calls, it's not going to do it, right? It's not going to do anything. It's going to protect zero if something happens to the downside. But what happens is when we sold $100 calls we actually collected over 55. I don't know what you got, but like $55 per call. Now, Robinhood was trading like right about here, or like 116s, 120, about where it is right now. And think about that for just a second. So my strike price is 100. My premium that I collect is 55, right? Or even low end 50. That means that if I get called away, my exit price is going to be $150 or higher, which, by the way, what is the freaking all-time high? That's exactly what that is. Am I going to be happy with that? First of all, it's not a full position. It's just a partial, right? And second of all, when would that happen? Of course, there's always the possibility of a contrary options exercise, which is something you might have to look up. But it's always, when you sell calls, especially in the money calls with a lot of time, there's always a possibility that somebody executes it against you early. So you have to take that chance. But when you think about it from that perspective, it gives you, one, an exit price at the highs. Two, it gives you $50 of downside protection. $50 of downside protection. Worst case scenario, we're both looking at this like Robinhood chart. I'd say $80 is absolute worst case scenario. Absolute worst case scenario. Is that $100 cover leap, if you will, going to protect me all the way down there? Hell yeah, it is. Hell yes, it is. And if it gets called away, what is my exit price? All-time highs. I'm happy, right? And in the meantime, I have many situations and a lot of time to do things in between, whether it's buy more shares, whether it's buy shorter dated calls and turn it into more complicated strategies, but it doesn't need to be that complicated. Doing that at that point in time, that is, one, a way to exit without taking taxes for this year, by the way, because it would be many years out or a year out. And two, it's a serious protective situation. So also laughable to me whenever I see people talking about, oh, these deep in the money calls are being traded. First of all, you don't always know if they're being bought or sold. Second of all, in the money calls is not bullish, no matter how you slice it. If it's buying in the money calls, that's a stock replacement. It's optionality, it's stock replacement. It's not bullish, right? Selling in the money calls, this is a real hedge. It's a legitimate hedge.
Can you explain why is it a hedge?
Because you're collecting like 30% of the share price right here and now. And if it went down, like it's not a one delta. If it went down, all of that is yours. You get it right now. And by the way, how are you going to buy the dip if you don't have any cash? Like, how are you going to buy the dip if you don't have any cash? So for those reasons, this is how and when you kind of do those things. Like whenever you're worried about it, but it's not selling near dated wheeling situation. Wheeling is for income generation. It's not going to hedge you at all. This is that's how you hedge, right? It's roughly
essentially if Robinhood were to take a 30% decline, that $50 you collected a premium, assume $75-$80.
Oh, that's going to be it's going to be pennies.
Yeah, you're going to be down a little bit, but you're not going to be down the full amount as if you
your position, your total position is not going to be down, not likely. Like your total position is going to be perfectly flat, and because of that, that is a hedge, and then you'll be able to buy back the share, the cover calls later if you want to, and if it just goes up and to the right. The reason it works, and the only reason it works, is because when you think about it from your actual exit price, you have to be happy selling a portion at that premium collected plus strike price. That's the only reason it works. If you're not happy actually doing that, then I don't know what to tell you. But that's the first criteria that you have to look at it. Even selling $400 calls or whatever on Tesla, I got an exit price at $550. When did Tesla trade at $550? It hasn't traded there. Like that's above all-time highs. So I have protection and I can continue to see this consolidation play out. And by the way, if these stocks go sideways, oh yeah, we're happy, baby. Like we're happy. So
and the argument about it trading sideways, I think, is really important because 3 years ago, when Hood was $8 and Tesla was 100, that was the time to go crazy buying calls. 3 years later, I mean, Tesla's up 4x, Hood is up more than 10x. It's not necessarily the time to be leveraging into calls. Not saying you can't buy them here, especially if we have a massive super bull run. But if things are relatively flat to sideways, even if they're not down, then those calls go to zero. And we collect all the theta in the money calls and can potentially buy them back out for cheap.
Plus, if it's a real position, like if it's a legitimate real position, you're not trading in and out of it every day. Wheeling is a lot of heavy lifting. Like it's a lot of work to wheel good, to be a really good wheeler. Shout out to anybody that does that like really good. It's as much work as trading, but this is a very passive way to let you, one, sleep a whole hell of a lot easier at night and not have to swing, especially in a large position. If you have a multi-million-dollar position, to not have to wake up in cold sweats thinking that shit, overnight I'm going to be down $500,000 or tomorrow I might be up $250,000 or multiple millions of dollars if you're Derek. So I don't know, but it's the easy way to sleep well at night and know that even if it does go up, I'm going to have an exit out partial at the minimum at the all-time highs, which it's not even close to. And if it does get down, how am I going to buy the dip if I don't have any cash? Like that for me, that's my biggest thing because of how I have to operate. Look, I don't have an account that I just have a W-2 income going into. It doesn't work like that for me. For me, it's one pool of money for trading, and I don't really deposit on it. I just try to compound it all the time, and this is kind of how that works.
Last question on this, then we'll do the TA. Why this over buying puts, in your opinion?
Because it wasn't going down right away, right? And because of where we were, buying the puts, it stairs up, elevator down, right? And so I will, as a trader, active trader, again, because of the way, if it's a real position, you're not super active. It's more of an investment thing. And to manage puts, first of all, good insurance goes to zero, right? When I really want to hedge, the best hedge whenever I try to look at that, the best hedge period is one that you do not pay for. Like, I don't want to put money out to pay for a legitimate hedge. Buying puts is a trade, and I don't have a trade here that says Hood's going to $80 right now. I actually don't have that on the chart. But if a headline comes out or the wrong thing comes out, can it happen in an instant? Absolutely. But personally, I'll see that in real time. But again, as a passive move, doing this is much easier to manage, and I don't pay anything for it. If I bought puts, again, same question. How am I going to buy the dip? How am I going to buy the dip if I don't have cash in the account to buy the dip with? And second, puts are going to happen fast, and and for the majority of the rest of the time, they're just going to bleed out on you and eventually go to zero. And they're probably going to go to near zero. You'll probably be down 50%, maybe 80% by the time you actually need them. And then it'll probably happen right after they expire that you actually need them anyways. So for all of those reasons, if you're not trying to time the market and you're doing other things in those situations, this is the better option.
Yeah, and someone in the chat says, so are you scared of Hood and Tesla if you're doing the strategy on them? I think the answer to that is you are trying to protect a large position. Because again, as Jason said, wheeling is you need income. So you buy 100 shares of Hood, you sell a 140 call for next week, you collect
regular income. Yeah.
Yeah. But if you have a big position, you started buying at $8, I mean, and you're worried that things can go south or things can just not go your way. I mean, we saw the S&P 500 go down 5% in November, and Hood was down 30%. That's scary for a very big, or Tesla, right? Or any of these high beta names. And so having some level of protection going into the next year, I think it's a responsible thing to do.
Now I'm old too, because I think you just turned 30 or something.
I turned 28, but yeah, as I get older, it's like you work so hard to get the money.
It's a different thing, right? It's definitely a thing. There's wealth preservation, then there's wealth creation, right? We've created a lot of wealth on Robinhood, a lot of wealth, and I think there's a lot more to go, right? But also there's other things out there, right? That you might want to buy. It's just a way to have an optionality to exit later on. But in the meantime, you still have a lot of upside available, and it's not like it's hedging your upside 1-to-1 either. Right? It's only going to go, the whole thing goes basically negative over 150, which again is where you were planning to exit anyways.
I mean, if Hood breaks over 150, we're talking about massive bull run, which you have to be okay with. But that also means the other parts of your portfolio that are not as hedged should also do amazing, right? If we're actually going that far.
Well, I think Hood can get over 150, or even higher, but I think it's going to be due to a lot of other things. Look, I love Hoodie. I'm not selling Hoodie right now, right? And I think that if I got an $80 dip, I'm pulling out a loan to buy that dip for sure. But the $120 dip, $100 dip, I think is perfectly normal. And I think, quite frankly, we're still in that consolidation phase that we've been talking about for Hood for a while. And again, this is one way to take advantage of that without having to overly manage it. It's just like set it, forget it, one and done. And in the meantime, look, you're going to have plenty of opportunities to do some stuff with it near term. You can still pick up more shares with the extra cash that you just collected. I mean, you're talking about collecting a lot of extra cash. So anyways, yeah, there you have it.
Let's get into the TA of this one.
Yeah. And so when we get there, we'll have plenty of time to see, hey, look, this is going. So Hoodie right now, I think like this last dip, and I think for me, it was like below 110, Hoodie gets real sketchy. But this right here was literally the lowest that I was willing to see this go on this more recent dip right here. And so far, it's actually held. I pulled something up. So this is, I'll play this timeout. So this is event contracts. This is actually not event contracts. This is NFL wagers and CFL wagers. So this is industry wagers, meaning this is a potential Hood TAM, right? Addressable market. What we're dealing with right now is that as we get into the bowl games for CFL, right? For is it CFL? Anyways, college football.
Yeah,
it's not CFL. CFB. Good God. CFB. We have a little dip in the college games, and at the same time, we have like a pretty stabilizing area for NFL. So green is NFL, orange is CFB, college football. And between now and what is this, mid-January, there's not a whole lot to be done in those NFL, college, in those football event contracts. The rest of the contracts, guys, straight up, they're minuscule compared to football. Football is just absolutely freaking massive. Just so you know, this is like $9 billion for the industry. Like 8.5 for this is industry average wagers. I'm sorry, Eddie. I know I corrected myself. CFB, college football. Anyways, but in the meantime, where Hoodie comes in is that I think that people could get a little distracted by potentially event contracts slowing right here, right now. But what I'm telling my crew and you guys right now is that this should be expected. Now, because event contracts are kind of like a new thing for Robinhood, I think people don't understand. And definitively, people that trade the stock market do not understand this industry. So I'm telling you, that's what this industry is. This would create a buying opportunity for me, right? And if there's some kind of other volatility within Hood, that between this and some other whatever headline could create that dramatic pullback in Robinhood, which will be a buying opportunity in my mind. And it sets up for this massive, and I mean freaking massive move that will happen, that always happens, that happens every single year. So do not think that that is not going to happen. Event contracts will triple, period, mid-January. We're not mid-January yet. Now, all that said, this dip that's happening right now, I think is a potential opportunity. Mid-January, that's going to show up. And when this shows up, this is just industry. When this shows up, I think it's going to catch everybody freaking off guard because they don't know what I'm talking about right now. You guys know it.
If crypto declines, it's going to be a wash essentially. It won't
Potentially,
be-
yeah, it could be a wash. We'll see. I think that, and then we have Robinhood Social, which is finally going to emit a significant other potentially, but that's the big win if it happens.
I don't know if Robinhood Social is going to be that important, dude. I mean,
It probably is not going to be that important right away. It's probably going to be a big thing like years down the road.
Yeah.
So all that said, look, it's a what do you call it? We've had a big move on Robinhood, and I think now that they're in the S&P, I think they're going to be a little bit more stable. We have multiple what they call cylinders, right, for the business that are firing off like left and right. I think there's a oh shit moment that's going to happen on the event contracts one more time. Once Robinhood did this more recent shift in the contracts, I don't know if you've seen them lately, but the UI is changing all the time. And this most recent UI change is pretty big. They opened up player prop bets. They opened up spreads for college. They opened up all kinds of other types of bets that you couldn't do before that have honestly part of what's holding Hood back. I think these more recent shifts, albeit the combos are probably lacking still, probably doubled the addressable TAM right now for Robinhood. So even though maybe we get this little bit of pullback, maybe it's not that bad. Maybe this is it. But you could have that knee-jerk reaction. So that's a fundamental catalyst incoming. It's not here.
And one thing real quick, this was a quote by the director of sports operations at DraftKings today. This was a marquee event for Jake Paul versus Anthony Joshua, and we had a significant liability on our books. If Jake Paul did not, or if Anthony Joshua won, we would have been losing over $150 million. I thought that was interesting.
Did Jake Paul actually win that?
No, Jake Paul lost. But
okay,
the point
I was going to say, no way, no shot. Did he really win?
Yeah, he was. So they had 100 million liability because if you like, everyone just started betting on Jake Paul for some reason. So 86% of all the money wagered on DraftKings on the fight was on Jake Paul, which meant if Jake Paul won, DraftKings would be liable to pay out a lot of money to the people that picked the underdog. It was like odds were 10-1. The difference here between Hood and you can hate the prediction markets, but Hood doesn't care if Jake Paul wins. Or
totally
if Josh,
different business model.
They're just collecting a fee. And I think that's why DraftKings is dead.
I don't think DraftKings is dead, but I think that regardless, they acknowledge that there's this big thing that is happening with event contracts. They're going to catch this also. This is not just a Hood thing. DraftKings has this coming, right? And they're gonna benefit equally also. So I don't think DraftKings is dead. I think that actually that can look good. They know that they have to do something. They can do something with event contracts, but this is this is not a Hood opportunity. This is industry-wide what's coming. And this happens from like mid-January. We're now into Super Bowl, which is mid-February. At that point, like, look, it's going to catch everybody off guard, especially the hoodlums or the Hood analysts that don't understand this specific industry. Because, I mean, what you're going to see in terms of event contracts is going to be disgusting. Like, if you thought you saw something before, you ain't seen nothing yet. But they don't know that, right? And so that sets up a potential opportunity here. And I don't know where that's going to be between now and then. So really, that hedge is literally for this near-term point in time, which, again, I think that we are still here from a chart perspective. Sorry, we went on a pretty heavy rant. We are still in consolidation on Hoodie. So I like the chart, but it's not breaking out. This can get up to 130s, which I think it might actually have that opportunity, especially if we get a crypto bounce, 135. You're not like, if you don't have something, like, you could put some kind of hedge on there and expect some kind of consolidation. I think this is it, right? This is the consolidation that we're going to see. And it's not until this is going to line up to that mid-January type of time frame that, look, at that point, yes, this probably downtrend is going to get broken. That this whole thing turns into consolidation here. And then we are talking about it like 190 type Hoodie. But between now and then, we're going sideways. Yes, it's a super bullish hold, big move. And 110, below 110, that's going to be below this consolidation. And that's when I do know that here like this, I'm in for some downside. So unless this happens, until this happens, I'm not. But just so you guys know, it's that 110 level closing below that we're going to have a more significant dip. And I don't think that this will hold in that case. And that could happen in like the course of a week or two, because when I go to our annual chart, like where is my dip? It's right here, 85. So if you want to get me excited about a price on hoodie, it's right here at 85. And or just generally around that zone. I mean, yeah, I'm getting I'm getting wild. But even still, like the truth is, like if that happens, that's just a basic pullback, basic run of the mill pullback, and that's what that kind of breakdown would probably look like. So if I just took this and reversed it, yeah, it's right there. So 85 to 70, right in this general area, is where that would land me. So I think you hold the course, and I think that you just know these are the levels to watch. If it's well over 140, look, we're probably going, which again, doing some selling leaps, things like that, that gives me plenty of time to let this play out. However it plays out, that 135 area, when I say this is that bearish retracement. So up here, I have to expect some kind of resistance. And if it's significantly over, like we're talking 140, all right, it's all good, right? And we're going to 180s, right? But until then, I'm still consolidating. And I think that's all that this chart is doing right now. So I have this event stuff that's going to happen mid-January, Super Bowl, all of that. I think that's going to, in between now and then, if there's some kind of whatever glitch, that would be that situation that brings this a little bit lower. But I like this, and I do think that this generally holds, but I think that the process of getting through this is going to be a longer process than maybe people might think before it actually gets through.
Novo.
NVO. Did you mean Rivian? No.
We can do that after, if you'd like.
We can. It's very exciting. Are we on 2 or 5? We're still on 5. We went a little bit.
We should probably move to rapid fire now. Yeah, we've been through like 15 tickers. So yeah, let's get to rapid fire. We can do
okay, so Novo just got approval, right? Do you know about this?
GLP oral.
Wegovy oral, I think it is.
Oh, well, that's why I pumped last night.
Yep. What do you guys think? Do I take it, dude? First of all, that to get approved. Wow, what a piece of work. I mean, I think it's fine. There's probably a lot of orals that are coming. I'll just do it this way. So you have just a massive breakdown over here. It's got to get through. What are you doing? This chart is so bad, bro.
It's been a horrible year for them, but there are some massive tailwinds for next year.
Yeah, but it's not just for them. That's the thing. You think Wegovy oral is the only one that's going to get approved? I don't think so.
No, that's fair.
It's going to be a lot of others, right? And do you know that they're going to be the best one? There's a whole nother class that's like not a GLP-1, but there's like they do like multiple receptors, blah 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 blah. That's coming that Lilly has. Just so you know, there's a whole nother one that's like pre-approval that's like going out a lot of places. So I think it's good. 55, minimum 55, and then I don't like it, dude. I don't like it at all. I don't like this chart. I don't know. I just think that that's not, is holding. It's a hard space. Biotech is fine in general, but you guys show me a lot more. I mean, if this is over 60, we could talk about it. This is just such a blip on the radar, especially for such a big deal. I don't like it, man. I think I would just let this play out. 62 here. So this is the top of that range. This is the support here. This is the resistance right there. It's going to line up to your 200-day simple moving average. I can pass from 50 to 61, 51 to 61, and let that go without me. I think that, like, if you're really going to, if Novo's really going to have a breakout, this is the range that you want to take it, from 62 to 95. And I just want to see a little bit more before we can really say that this is going to turn the corner, because again, it's one of many that's going to get approved. I mean, it's the first one, great, but I don't know what supply looks like. I don't know what distribution looks like. I don't know what doctors are going to be able to prescribe it or not. There's still competition. So, and they're still trying to out the CEO, as far as I understand. So yeah, I think you could be patient on this one, but you don't want to see this below 48 again. Like, that's what you don't want to see. This is below 48 again. It's just a dumpster fire.
Nebius.
I didn't look. Nebius. What's this picture I have?
Yo, your texts are pretty accurate.
I mean, so this is where we are on Nebius. Look, also consolidation, right? So 84s was, this is like this text emit kind of thing. Look, you got this one. It's getting over. You tagged it, support, retested. It's been a chop zone. This area comes from this little blip on the radar. So I think this is fine. I think you could still, it's still nothing but lower highs and downtrend, just to be fair. But these are little bounces that, I mean, the bigger problem is that this is a lower low than the last low. And this right now is a lower high. So the trend count is bearish, just straight up. The trend count is bearish. High, lower high, lower high, lower high, lower high, low, lower low, lower low, lower low. Trend count's bearish. Let's not mix that. It's got to hold this 84. So that still remains that kind of like pivotal area that is support and is holding, but I don't have what we call a break of structure or a change of character in the trend count. When you hear traders talk about break of structure, change of character, that has to do with the trend count. That has everything to do with the trend count in terms of a series of higher highs and higher lows. So drilling in just a little bit, this is the prevailing downtrend. Look, you peaked above it. Cool. I think you can see that 85 level one more time. What you're looking for now is a higher low to show up, which means that a higher low can show up anywhere around that general area right in here. And then you want the next high to break structure, which would be a break of structure. And what that means is you want that next high after a higher low to show up, which ideally could be anywhere between 85 and 80. You want that to come down, lock in a higher low, and then you want the next push higher to get over 95, 88. That's going to be a hard requirement. If that happens, that's what we would call a break of structure. We just acronym BOS, break of structure. And then if that continues on, what that would look like is here, you do it one more time. This is called like a change of character. Like the whole chart is now changing character because you have not one higher high, but two higher highs. And you definitively want to go long on the next higher low. That would look something like this, around probably 95 would be my guess. Something in this area. Yeah. So it's in process. It's not a bullish chart yet, but the lows are getting smaller and tighter. And so the next thing you're looking for is this to currently lock in a higher low. And then you want to see that iteration of structural breaks, meaning get back over 95, then expect a pullback. And then I want to see it hold 90. And then the next high, I want to see it break 100. And then I want to see it hold 95. And that's generally what you're looking for. Next. Can you hear my bell?
A little bit, yes, I can.
VG. I bought some VG.
Whoa, you weren't in this.
What do you mean? We did it on Technical Tuesday.
No, but were you in this name last week?
What is this? $5.97.
Oh, wow.
Entry price. I bought a total of 250 shares.
I mean, it looks like you got the bottom.
No, not that bottom. But that's not my job. But we measured this last Tuesday. And we said this is probably it. And if it was over 590s, we were going higher. So that's what it was. It was just based on literally go back into last week's Technical Tuesday and look at what that chart was. And we kind of laid it out. Even here, can you, there's a on my, what is it called? My thing. Click on my profile and then go to replies or maybe media. And there's a video. No, replies. It's on replies. And I replied to our boy with a video of our Technical Tuesday where we broke it all down. Why is this so hard to find? Here. I can't drop this, but I can DM you on X. Does that work?
Yeah, that should work.
Sorry, it was like stealthy way. But yeah, we walked through this trade. You and I did. And so 675 is what, so you can drop that link. 675 is what
you just sent me you literally just sent me a live stream.
Son of a biscuit. Go to my,
whatever. You pull up the chart. I'll pull up.
Yeah. You just click, I replied to Chris when he was saying something. But over this 595 after, so we got to the downside the same way we got to the most recent BMNR downside. 675 was the first upside level to get through. Cool, we're over 675. So here now, I think you're going to 8s. You can have a little blip at like 740, at which point you want to have the 675 hold, and then we're looking at 8s. And that's definitively what we're looking at. How we got there, I think, was from multiple consolidations. This is one consolidation breakdown here. Yeah. So from here to here, I'm just going to do a horizontal all the way across, and then I'll show you where this comes from. So this most recent support is going to line up twofold: one, higher low, and then this consolidation, 740, sorry. So this is that last consolidation breakdown in here. So once we got over 675, we're literally retracing this breakdown area. And so that breakdown area, the top of it is 750. And then the area above that is up into 8 right here. So I think you could get roughly about half, at least for now, before you hit some kind of resistance. That's it. And then the current trade is kind of over. That's going to line up roughly to the 50-day SMA. I did it a lot cleaner in the video. So go ahead, just if you could, did you find the link? Find the link.
Yeah. You want me to play it?
You did. No, I think it's a full minute.
Well, yeah, this is when you were mentioning.
It's from last Tuesday.
Let's do one more, then I'll pull up that clip. Yeah, VG, let's do this.
So we had a little consolidation here at the lows. This is the actual low 670s. Here's your consolidation. Here was that support. Tried to be support, broke down, ends up being resistance right here. So that's how I define 870. And then right here, I can see support showing up here, support showing up here, and turn into resistance one more time. Oh. That gives me this little gray box that lines up with the prior all-time low. What I just did was I did an extension on that range here.
It's good editing. I mean,
Fast forward it a little bit just to the end, and then they'll give us the upside targets. It's about whatever it is, whatever I just outlined right now. But that's how we clip the bar. You're like halfway through. If you can get over, then you can expect to retrace half of this range, which is going to land you at 768, which is going to line up right here with this support, trend resistance, at which point you should probably take measures or consider that trade completed and on to the next one. On to the next one. So that's like literally what I have on my screen right now. but anyways, that's literally it. So that's why I think
780 is your upside.
Yeah, 770s to 8, give or take, right? Like right in here. That is resistance. So expect to slap your head on the ceiling right around here, and then probably pull back, and then maybe have more consolidation. That could be, from a percentage wise, that could be a lot of pullback, but it's a small cap stock. It's a small dollar trader. Expect some volatility when you get there, if you can get there. But right here, right now, over 675, you're good.
Okay. Google.
Legoogs. So target acquired to the downside. I mean, wild. So this thing did exactly as we were expecting. So there are the two main generals that I wanted to see kind of fall before this whole shakeout was probably done. Google was one, Apple was the other. I think Apple is completed. When we retested 299, filled that session gap, 302, came in. I think you're good. So at this point, more bullish news flow. Here's the deal. So we're retesting the 20-day SMA on the Googs. I think you have a little blip here. This could get into the 320s easily, but that's not the trade. The trade is like, if it's holding over 320, then we're going to do the same thing one more time, where this entire consolidation here becomes a breakout, becomes consolidation. And as long as that holds over 320, you expect it to get into the 370s, which is where we would be going for the next phase of Lagoog, right into 350 first and then up to 370. That's what she does. Right here, right now, though, just we've had a nice little bounce. I want to see that continuation. If I don't get the continuation, what that means is that we will probably have a deeper pullback into that 285 zone. But for all intents and purposes, that ain't happening right now. And we are onwards and upwards as I see it at the moment.
Okay. Reddit.
I think I said I would need to Bollinger Bands. Yeah, Squeezy. And Keltner. All right, so it's not squeezing yet. It's like, okay. I just put some volatility markers on it. That's all that is. Yeah, I think that this could, you got to chill. This is a hard one to trade because of the way it acts. I think 226 right here, right now is an important hold. We want to see this general area become support. Probably not this week, but maybe into next year. Then your squeezes, if you can get over 242, then boom, you're at 275. But that's the squeeze area is going to be over 242 right here on Reddit. If you can get those closes over, I mean, yeah. For right now, this general area is like, that's support. I don't think this is going to break out tomorrow by any means, but expect that to hold as support and then this to act as resistance right up in here, which it has. And that's the little box that she lives in at the moment. So it's super tight box, but you gotta wait. When she gets out of this box, then you're gonna get this big move. Downside move would be, I mean, somewhat equally violent, but down to 190s. That's your downside. It's a little bit more upside than downside on this one. Holding pattern.
Rivian.
Breakout year coming, dude. That's all I know. Breakout year coming.
It just had a breakout. Does it have another breakout?
It has not had a breakout. That's what I'm talking about, dude. It's not a breakout. Not even close to a breakout. 2194. So all it is right now is consolidation. If next year Rivi's trending over 20, like 22, yeah, we're at least seeing 28, which by the way could happen a really like pretty simple. Look, you got R2 coming. At the end of next year, you have R3s coming. And R3, that R3 model, I'm pretty sure is going to be like a massive transformation to the entire business model. And in the meantime, they're selling less R1Ss, which by the way is actually good. So here now, yeah, this is consolidating. I think we got to that 22 level. That's nice to have. If I get dips into the 18 areas again, I think this needs to be a serious position, like a more serious position, like a hood level position, because to me, that's just my personal opinion. This is a 10x in 10 years. If all things go well, that's what this is. So yeah, chalk this one up to your boy's annual pick, if you will. If I had one, like, yeah, I like it. I love it. I want more of it. I'm not sure that I have enough.
Do you think Rivian outperforms Tesla in 10 years?
Yes. From a percentage perspective, 10 years, hold on. 10 years, 3 to 5 years. Yes, 10 years TBD. Because there's more specialized, again, it's California's market for the EVs. I'll just tell you right now, if you wanted to get something as simple as a gas-powered water heater in California, just so you know, they won't sell it to you. Like they're like Newsom is ridiculous. He makes all kinds of ridiculous decisions, but like you can't even buy gas-powered water heaters, right? They're not going to sell gas like appliances. It's all electric, and it's not like you have a choice. And I'm not saying that they're going to change that for the cars like in real life, but circuits are going to get upgraded. It's just what it is. Like it's just what it is. And Rivian fills a very specific niche explicitly with that R3 model that I think is going to be a really big deal. And I'm mostly excited for that. It's like their crossover SUV, and I'm definitely buying at least one when they come out. At least one, but yeah. So that's where we're at on Rivi. I think it could be. This is going to be a transition year. It's going to be a big year for it's not going to be clean. It's not going to be up and to the right. Anytime you have a new model or something like that, expect problems. So it'll be probably choppy. But yeah, 1850. If that pulls back and holds 1850, that's the sign. That's the signal. The bat signal, if you will. Cool.
Okay. Nike.
I mean, Tim Cook likes.
By the way, Oppenheimer named this their top for next year.
Dude, you need to call. Where's mom? Get her on the phone. She needs to shut down every other internet connected device that they have on the network. And like,
dude, I feel like she's just like on her computer and it's like hurting the Wi-Fi. But I was saying that Oppenheimer says it's their top pick into next year. Nike.
I don't hate it. I think from here, I don't hate it. I don't love it. It's again, it's the same thing. Look, new CEO, transition year, transition era. I don't know that it's 2026 as much as it's probably 2027 for Nike. First things first, she got to get back over 60. And so I think right here, right now, you're going to see that attempt to get back over 60 or retest 60. And if it can do that and hold, like you're coming into a pretty heavy support area. And like what we just like fell to is literally the bottom of those. It's $50 to the downside. But dude, if you have the patience, yeah, this is fine. You don't want to have it be like a massive position because it could be an opportunity cost if 2026 is not the year and it ends up being 2027. But you'll know on the charts, like it's got to get back over 60. Then we see 70, but $70 is really that key pivotal moment. Like this is not a small cap company. So this is a behemoth in the space. It's the $70 to $80 level that I think if it holds comfortably over 60 again, that's where it was on its way to getting to. It's just this earnings part. So for right now, in the next day or two, I think, it's the next, literally day or two. That's your last opportunity to use Nike as a tax loss harvest. And then I think you'll see, right? And so 60 still remains to be that big deal level. And if we can get back up over that, then it's nice. The chart is disgusting, but it's if you're gonna be looking for that higher low to begin, it's here. This is it. But a note on price action. Just because we have a higher low does not mean that we have a higher high, and those are two different things. So the lows are still technically, even though this more recent one, it needed to get over 82 on that more recent push, and because it didn't get over 82, best case scenario. 82, because it didn't get over this order block or what we call like this value area. It's still in consolidation. So I would expect like this and then another one down, and you need time on this guy for sure. So that's where I'm at on Nike. It's interesting spot, but expect some consolidation before it actually reverses, like significant consolidation. Okay.
HIMS.
HIMS. Well, I mean, if there's lots of oral GLP-1s or whatever the next one's called, it'd be interesting. Nah, dude, I just can't.
It's ugly.
I think it's played out, but as in like the Head and Shoulders played out. No, almost $30. $30 is fully played out. It should hit $30 now. And maybe it gets to 30, maybe not. It's probably good enough. Yeah, I mean, I can wait. I think this was a decent bounce spot the last time it was here, but not this time. Because again, the last time it was here, the difference is that the last time it was on this level, it hit resistance and it made it a lower high. So best case scenario is more consolidation, not one that's ready for a breakout like in the very near future. No. I'd wait. I'd still wait.
Okay.
31.97. 31.97, which is really close to the last lows. IREN's super similar. I just did IREN and Cypher for my crew. So these are slightly different charts, Cypher and IREN. IREN is, it hasn't changed from last week. Like, again, if I go from the absolute lows in here to the absolute highs, what's interesting here is that, boom, this is that what they call golden zone retracement right in here. But it's not out of it yet. So yes, that's important to hold right in this area. You're kind of like hitting its head on the 20-day, which is the first order of business that it has to get through to think that it's going to turn around. Neoclouds in general didn't have a great day. I mean, it's like 39 is the super near term kind of pivot right here. So these last lows here, here, here. It's interesting. It's got to hold this level. So 1-2 shots at that 20-day. I kind of give it a little bit more. And as long as you can hold in this general box, I think you can be constructive on IREN, meaning that pullback from the swing lows, swing highs has been completed, and you would expect it to at least go in consolidation, but you don't have a break of structure here either. You just have nothing but lower highs and lower lows so far. So we have to wait for that structural break, which means that this must get over 45, which is the last high here, and 44.5. And so I would expect if IREN can get over 45, for sure, assume that it pulls back. And then if it holds this level, you can be more constructive. That right there is what that needs to look like. But that means that probably 10% up, followed by 10% down, like shortly after that. And then like a 15% up, and then like a 5% down. And that pathing is what that would have to look like. Otherwise, if it can't hold that 39, that most recent area here, look, if you get this, you're going to 30. So, more time.
Okay. ZETA.
Someone asked me about this today. ZETA. I mean, I don't think he's going to go anywhere next year. I don't need to rush out and get this. Like I say, anywhere. Like you're here to still trading into those 30 levels, but that would be your best case scenario. You're not there yet. This is a weird one. It's supposed to be enterprise AI. I don't know if you know Braze, but that's like the smaller cap version that's been around longer. I've watched Braze for a while now. I still continue to watch it. If Braze does well, then ZETA should do well. But I mean, who they're competing with and what their market cap is. I mean, I don't know how much they're going to steal business from Meta. That's what you're talking about. Like you're talking about a company taking business from Meta. So consolidation here's fine. I think this general area is where it should stay for a while, probably through earnings, which is mid-February. You'll probably get a pre-earnings run up that takes you to 20s, and then expect another pullback. Best case scenario, earnings is flat, and then you continue on. But that's what that looks like.
Celsius.
Still a bag holder. Woo! No, it's fine. So this area from here to here, this is ours. Swing low to swing high. This lower level here, that's that what I call the golden pocket. You're out of the golden zone, which is up to 43.80s. Stay in the course. Happy, consolidate. Look, this can pull back. I don't want to see it lose 43. Like, I don't care. I'm not going to look at this one. I'm not selling this. I'm gonna see how I'm just gonna see what she has in store for me, man. I like this one in terms of having a little bit of diversification. Did I not play that? Because it just lives in a different sector. I do think this can see mid 50s. But again, it's not until it's really over 60, which is 50% higher, that this becomes a really bullish story. But to me, I'm looking at a chart that has the potential of at least making it 260 again, which, like I said, that's a lot of percent. Even from here, that's like another 35%. Can't say that for a lot of charts. So I like this. It's not one where I would want to put new money to work. I think that shot was one and done in the high 30s, which you either got it or you didn't. Otherwise, you're still running into resistance. This is resistance right now. So I expect some consolidation until I can get up and over 45 in strength. All right.
Okay, we'll do about 10 more tickers and then we'll be done for the day. I'm putting Jason's Twitter in the chat so people can make sure to follow him on X.
The market is a half day tomorrow.
App love it.
Are you doing a stream?
Yeah, we do have a half day tomorrow. I mean, I'll do a market open, but there's no close because we're closing early. But yeah, I'll be live.
I mean, she's testing the highs. This is gross. I don't know. So give this a couple shots at that 745, 750 area. It has to hold 650, which it is. That last pullback was 656. That's perfect. So if that can, it's $900. Well,
dude, they have the growth to get there.
I mean, there you have it. What are we doing with this stupid stock? Every time I look at it, it's like, why didn't we buy it? I don't know. I would rather AppLovin over ZETA, I think. I mean, these guys are taking it. Similar business, right? I could be wrong. I don't know. I think it is similar.
Yeah. Microsoft. Or we could do DraftKings too. We could do that too. Come on.
Well, you were hating on DraftKings.
So I'm not hating. I have nothing against it. I don't care about it. I think the business model is inferior. I don't care.
It's different. It's definitely different. Look, no, Microsoft is good. Stay the course, man. This low that we talked about lining up with that 200-day, that was it. And you expect this consolidation. This probably has the next bounce. This probably has the next bounce with Amazon. Yeah, to 510. And if it can get, I think it's 510 before earnings. So whether or not that's good enough for you, you have to decide. It's another 5%. You could get to 520, mid 20s, at which point, like, yeah, it's possible that I mean, that's what's in the charts right now. So this goes to 510, maybe 520, at which point that's the bearish retracement right in here. It's not until you get over 525s that you're like, oh, okay, this is definitively happening. And what is definitively happening? We did this. Do you have the did you put the playlist together or no?
Yes. The reason you can't see it, which I thought I made it off unlisted. I don't know why it's still unlisted. Okay. But I'll pull up your
was the last time I did this. This is 6 to 650 for 2026s.
Yeah. That's what you said.
On Microsoft. So nothing's changed here. Stay the course. Perfectly happy. Looks like that was so far the best dip buy that we're going to get. Microsoft's big cap. You want to just like give this some time. But I think you see 510s plus before we get to their earnings, their next earnings report. So DraftKings here, this is a measured move from this low to this high, that last $26 dip, right in that sweet spot pocket, right in here. As long as it's over 32, which I know seems like a ways away, that's a bullish retracement, right? From here to here, this gives me a trajectory to get into that $45 range by February, for that kind of like Super Bowl rush. In the meantime, what this sets up as is a broadening formation. And so I'll clean this up in just a little bit. So it's these lows here. And I was looking at this just like today. I mean, we have earnings that's not till mid-February, which should be their biggest earnings, although the market expects it to be their biggest earnings. Just I'll let you know that. The market absolutely expects DraftKings to make a boatload of money next quarter. But yeah, as long as 3160 holds right here, that's bullish. And just coming off the bottom end of that general like broadening range, and then now you're sitting over the 20 and the 50, I think you make a trek into this area. I would call it just under 40 for this next move. But quite frankly, if that happens, the top of that box, this just basic from broadening to broadening, from low to high, is over 50. So that would be still up in here for 2020, late 2026, same time next year, 1 year from now in the 60s, which is really not bad. That's 2026 target, $60. Cool.
Okay, let's do grab, but real quick before that, the Samsung and SK Hynix, they just raised their memory prices by 20% for HBM. Micron's not making a move after hours, but I mean, the argument is that Bloomberg is saying, driven by the approval of Nvidia's exports to China, they're increasing prices, which is smart.
I mean, good for them.
Yeah.
Yeah. So these companies, SanDisk, Western Digital, Seagate is different. STX. Those are storage, but they're all in the same kind of realm. What was I gonna grab? Ooh. Wait, when did we get that bounce to 520?
We got it yesterday.
Okay. So I'm happy. Here's next year. Oh, man. So 572. It's the same story that it's been. If Grab can trend over $6 next year, which it may or may not be a 2026 story. It might be a 2027 story. This is going to be money. And then, well, and money is in terms of you're going to 8 and so on and so forth. And ultimately, like that, what's your $10 target by 2028?
No, it was early 2027.
Yeah,
I still think valuation-wise that's possible, but technical-wise that might not be.
It is. So it's all narrative-driven mostly. I mean, that $5 dip is basically what we want it to hold from here. This is just typical volume stuff. So we have a massive accumulation area right in you know, right around $5. So is this a higher high? It's such a small cap stock, or small dollar stock. That's I think it is. I think we're good. Yeah. So because that just as simple as this, because that little blip on the radar to me went over, same thing, same logic as like the other SPY stuff. Now it's like, oh, it's right here. It's literally right now. Okay. 506-ish. As close to 5 is, I think, is fine. You just want to see it hold that. I think you're good. It's a low. Dude, technically, it's even a higher low. So, I mean, ultra stealth technicals, which is like, dude, okay. I mean, I like it. So like, if this is the low, right? And then if this is, I mean, higher low, who turned my caps on? Yeah, I think you're good, right? This is, yep. This was a lower high. But here, that's a higher high, which means that I need to be looking for a higher low right here.
Yeah.
And then if that's the case, we're looking for this next one to get up into 530s. You're looking for the 20-day estimate to hold here, and then you're kind of looking for this like little blip in the radar to to act as, it's probably going to act as resistance, like right in here. At which point maybe we get a little downside. But again, if that happens, that's good. And then you want to see that breach over here. That's good. And then it can pull back. Fine. And then that's how you get there. So yeah, it's acting right.
Yeah, and again, I also think, honestly, I really do think TA is pointless on this. Like, this is going to need a fundamental catalyst, and then it will make a move. But that,
why you got to throw me under the bus like that? I mean,
it's not even you, but it's the same thing with VG. Like, everyone's just so obsessed with the move, and it's like sometimes there isn't. Like, VG still has a massive lawsuit they have to deal with, even with the move today.
Yeah. So let me be clear.
Some news on that lawsuit. You know, like anything could happen.
Yeah. So this takes you to 6. That's it, right? And so like then we do this. Yeah. So when we're talking timeframes and stuff like that, I'm sorry, to 573 is what this takes you to. And then you get to here. It's not until you're, like I said before, and this lines up, I mean, perfectly, until you're comfortably holding over 6 for, call it a month. The way that this stock moves, I mean, it could take a while. But that's what this looks like. And if like you don't hold this, well, shoot, that's what happens here. And if you don't hold 575, well, that's what happens, right? So these are all your pathing. But from here now, you're on the path to 570 at least right now. But that's all that this can tell you. That's all the TA can tell you. Can't tell you if it's going to be 10 or anything like that, really, to your point.
Yeah, again, like, and the reason I say the TA is pointless on this is that a lot of these names have been stuck for so long, which is they're either going to continue staying stuck, they're going to collapse, or they're going to make a big move. And that's where it comes down to fundamentals more than anything to me. Like, obviously the TA is kind of helpful to understand it, but when it's been consolidating for this long, for a year, as the fundamentals have only improved, there's something deeper going on, in my opinion, and that requires a broader fundamental thesis that inevitably is either going to happen or not. And you know, find out next year. But I think it's testing people's patience. Same thing with VG, and like sometimes you got to just let the thing happen.
I thought VG is great, dude. I'm up 20%. I just bought it.
Yeah, but if you bought at the freaking IPO, you're down 70%. A lot of people bought at the IPO.
I'm getting ready to sell it. I mean, I don't understand. What's wrong with this? I already have 20%. What are you talking about? I'm only it's not gas, right? Like, dude,
No,
Natty
it's
is
liquefied nat gas.
No, dude. Whatever. Yeah.
Okay, let's get into the last
The
couple and then we'll be
Widowmaker.
done for today.
California is going to put freaking nat gas out of business, even though it's way more efficient. What was the next one? Sorry, I missed it.
AMD.
AMDZ. I do think it was a good spot for Natty also in general, which is nat gas. Okay, so let's talk about this AMD chart because good night. This thing is moving, and I'm just like, 227 is still the deal. I was looking for the 185. Didn't get that. There was a clip in one of those old technical Tuesdays, and I remember being like, I remember saying, okay, editing team, screen clip this. And I'm pretty sure I said like, what did I say? Something in here. I'd have to pull it. Like, and I was like on the, yeah, so it was this session gap, something like that, 198, and no, it's farther up. Anyways, it was about here. Oh, it was here, 90. Anyways, something around here, right around this 199, something like that. And we got there. The thing is holding, is my point, and it's about ready to do the deal. I think it's going to go back up to 227, and this time it's got a better shot at making the rounds. So this I don't want to see go down anymore. So if it's going to do the deal, this has got to be it. I think it can get to 227. We talked about structure for what AMD needs to look like. It needs to look like this. And I think at that point we're good. So where does this take me? This takes me to like this general area right here that I think it's heading towards. So 230, 227 and 230. Then I think you're going to get a little chop just like this. And then I think over 230, you're going to get boom, straight to 245. And I didn't even have this measured, but this is exactly how I foresee it going. Is that like you might get a little chop in here, and if you lose 239, boom. But then that 230 area becomes your dip buy, at which point, like if the second that you're over 240, but this is the trajectory that AMD's on. I think you need to watch this from here on out because technically it's a nice low. It's about to try and make a structural break, which is what this would be. And then it's back on the up and up. If it can get up to and hold 230, essentially, which looks a little something like this, she's on the up and up. It is what it is, which up and up takes you to 256. It's not until you're over that area that this whole thing becomes your consolidation and turns you into a $300 stock, which is what we were talking about for AMD. 2026. Just in case. Merry Christmas? I don't know. TBD, but that's what this has to look like. So for now, this looks like we've locked the lows.
Broadcom? Do you think it's
Looks
the same
good.
trend?
Yeah, so downside we had 235. I actually went a little bit lower, tested the very bottom end of this. That should have been it. Marvell, better. But yeah, so this is support. I added a little trade on my Marvell. Yeah. Broadcom's looking solid for a bounce up to 370. So 370 is here. This is where she's headed, ish. And then you still have to deal with your like how expensive or cheap it is. But between Nvidia and Broadcom being named as whoever's so-and-so's top pick for 2026, I think they have a little juice in the immediate, and I mean immediate, up to 372. So this one, post earnings flop, this 347 is a pivot or price, we'll call it price of interest. She opens up over this level tomorrow. This one is getting a follow through tomorrow. Like this is between this and Nvidia, Broadcom and Nvidia are your two like Santa Claus rally trades. So I do think that this in the next couple of days sees 360, if not higher, and then probably into 370s. Why do you agree? What happened? Is it because of the headlines?
That, but also Broadcom. Dude, Broadcom from 420 to 325. At some point, it was going to bottom, and people were going to say, "Okay."
It was supposed to bottom around 335, right? And then it breached a little bit. Yeah, you have a broadening range on this, so it could get a little wild. Here's your broadening range. So ultimately, we're looking at 400s again. Ultimately, but this is the trajectory. I like the Marvel. Similar, but same thing. We're going to 100. One more.
APLD.
Okay, just so you know, it's Marvel. For everybody not asking about it, since we're on semis. This looks okay. This looks okay, as long as you can hold 25. Actually, I think this was a good pullback. You're in consolidation, so higher low and lower high. That's what that definitively puts you in. So here, your consolidation is tough. You lose this consolidation level, then it starts to make a move. But this is a heavy consolidation zone up to whatever that is, 30, down to 22s, and then probably sideways like that. If you really make it up to 30, then that's well, no, it's got to get over 35 to be like, okay, this is happening, which, I think is the trade on this anyway. So like, if that happens, your consolidation here ends up being somewhere around, yeah, so it's got to get over 32s. And if it does, cool, then you're talking about an extension into 50s, but not before then. It's also a good trade. And this stuff can happen in the first quarter or second quarter of the year. That's not a full year target. I mean, it could happen, it could get up there and then it could turn into $10 stock after that on something like this. Okay, next.
CoreWeave.
Scared. I mean, consolidation. Stuck. She is stuck. I really want to see this trend over 85 before I can. It's over that 80, like 85. I mean, it's still in the same box that it was before. So here's our last non-farm. Actually, yeah. So, I mean, you got two levels, 85. It's got to be trending over 85. And then it gets to 90. These lines just that I popped up right now, those are your levels. That is it. So 73 would be the downside target but I think this is probably done. So I think you retest 91s at some point. From here, the downside fundamentally looks like 73 and technically lines up exactly to 73. Boom, right there. So if you want to take a shot and you see 73, That's gonna be good. This might not pull back that deep, but if it's over 85, expect this. And then it's when it's over 91s. Is this a choppy area? It's over the 20. I think you're good. You got to throw this in the garbage if it's under 73 again for the near term. That's when you're in trouble. But she looks fine. She looks like she's going to try and consolidate. I don't know that this Santa Claus rally trade, though. I think credit market might tell you a little bit more. But, okay. Why are they saying
I
duo?
just think of data center. I mean, we could do Duolingo.
I'm just curious as to what it's doing.
Dude, this thing is a disaster. Like, this is actually the worst.
I'm so pissed at his pick.
Dude, if I didn't have Duolingo, I would definitively be in first place in the draft.
Really? What are your other
If
ones?
I had just anything. If I had any, if I had
you're
just,
not going to beat Rocket Lab.
SGov. No, but if I didn't have a 60% down ticker, it would help to beat Rocket Lab.
No, but dude, you're not going to win those. Do you know how hard it is? How freaking hard it is to pick a 1 year long thing? I've tried, dude. Like, no, that is a hard thing to do. There's a considerable amount of luck required to win something like that.
That's awesome.
Yeah,
I could have picked Nike, and I could have picked Nike at 62 and barely been down instead of.
You could have picked Nike. At least you got Apple. That was a good year for Apple.
Dude, I almost traded Apple for Hims, and Steve said no. Thank goodness.
Yeah, no.
And he actually likes Apple more than me. So.
Yeah, it's not out of the weeds yet. No, this thing's gonna take another leg lower. It doesn't look good. I mean,
let's do SMCI.
what happens if I say it's a double-digit stock next year? Can I pick a short? Can I ask you to pick a short? Can you pick a short trade? Like the year?
Let's ask the chat. What would you short next year if you had to pick one shot as a short?
Who said BMNR?
I don't know if I would short Duolingo, dude. Like they're down 40%, 50%. Like I don't know if that's a short. I feel like you have to pick a name that has run up so hard already. No, I wouldn't short Adobe. It's a good company.
Ruru.
It's not
Dude,
exciting,
okay,
but it's a good company.
Hold on. This is a 1 year chart of Adobe. That's ugly.
It's ugly. It hasn't done much.
That's a for real ugly.
Open door? People are saying short open door.
I mean, are you not shorting like Rigetti or something?
I don't think the quantum names can be shorted. I think they are too powerful
for a whole year.
Yep. I mean, they might have volatility, but
they
have come back stronger than a lot of the other names.
Oh, when they do, but like to hold for a whole year. This was the best short ever. We're like, Moderna's going to the gulag.
What about silver? Is that the short?
Silver and gold become a short if all the AI like questions are answered and AI produces a massive run out of the blue for GDP in real GDP. That's like basically what has to happen. I was really concerned, so I have a good amount of bullion. I don't know if I'm sure I've talked about this, but you would want to look up something called financial repression. It's not the debasement trade. It's different. It's called financial repression. And because I was like, when do I sell my silver or gold or whatever? But as long as real rates are not positive for multiple years. It's just, it doesn't have to come down. And really, I hate the motion stuff. It like gold can still win in this scenario. Again, as long as real rates are over 2% for years, that's the only reason that gold would top. Gold and not just gold, anything with a symbol on the, I said scientific calendar earlier today when somebody was asking about this, the periodic table. If you got a symbol on the periodic table, you're going to be fine. And this ends up being the clean exit plan with, I would say, terminology wise, just random productivity miracle, which is that AI trade. That's what it has to be. So if there's no reason for that, geopolitical risk hedge to come off, the debasement trade is kind of done. And there's a GDP like explosion. All those things have to happen for that to be a sell. And even then, it might only be a 15 to 25% drop and just have it to rally one more time. So it's not a huge thing. But yeah, it has to be, this is more for the macro Thursdays, but it's technical Tuesday.
You could also sum it up as like, if we are more certain about where the world is going, we are more certain about AI, more certain about bonds, why do gold and silver catch a bid? Because they're a hedge against uncertainty, right? Yeah,
and real rates, right? So it's very much these three things. It has to be sustained positive real rates, right? Genuine fiscal consolidation. I was looking at like how much spending is Trump gonna cut next year on CELH? Do you know, just off the top of your head, what do you think the guess is that Trump is gonna save from a spending perspective next year?
Zero.
Yes, fucking zero, dude. It's straight up zero. There's like there's 90% like across the board, like nothing. He's not going to slow spending down at all, which is also what would have to, which is what would have to happen for that gold and like this debasement trade to slow down. These specific things. So screenshot it.
But isn't it crazy that gold did what everyone thought Bitcoin would do? Like infinite money printing, bullish Bitcoin. But in reality, like it's like no one wants digital gold as their anti-cyclical trade.
Yeah.
It makes you question. It makes you question Saylor's entire argument about money printing leading to Bitcoin being the hedge. Not saying it's wrong, but why didn't it work this year? I guess is the question.
Mm-hmm. I mean, this year was the year of the periodic table. That's it. I mean, that's it. But you can look up this term, financial repression 2.0. Interesting concept. It's not debasement. It's very different, but it's also stealth QE, which is exactly what we're seeing right now. So it's the end of QT, stealth QE.
So what would be your short next year if you had to pick one?
Well, I wasn't prepared for that. What if it's Pfizer? This is whatever chart's on my screen. You didn't hold the 26, man.
You're the one who asked the question.
I mean, Duolingo's good.
Netflix?
That's such a lame short. It's doesn't even have that much downside. It's basically already hit the downside. No. You're already halfway through the downside on Netflix. By the time you hit your downside target, it's probably be a long. That is a hard one. I know it wouldn't be Pfizer, but it would be. But I always want to root for Pfizer. You guys, like, I always want to root for Pfizer, and she does me dirty every time. But yeah,
bro, can you hear me right now?
Yeah,
I think I fixed it. I freaking fit. All I had to do is connect to the Google router upstairs.
Oh my goodness. What were you connected to? Your cell phone?
That would have fixed this whole stream
All day
with the
long.
delay. I didn't realize the router downstairs was harder for it to connect to. That took 2
Somebody said
seconds
Boeing.
to switch, bro.
No, I like Boeing. What are you talking about? Boeing's a long. What does me dirty? It's because like Boeing's a long. Anyways,
Dude, what's
just
the
see.
short for next year?
It might be Adobe, dude.
No, it's not Adobe. You can't look at their
Why not?
numbers and say I'm going to short that. There's no way you could say that.
Why not?
Their numbers are fine. There's nothing to short about their numbers. It's just the stock's
It's
narrative.
about the valuation.
No, the valuation's
Uber.
cheap. Same with Salesforce.
Uber, by the way, if it can hold over 86 next year, she's gonna look good. I don't know if anybody caught that like earlier. That's a long time trade. And we're I think at a spot. Did we do DraftKings? Oh, no, I did. We did do DraftKings.
Why are you so obsessed with DraftKings, bro? Like, yeah, we did it. Like, you cheating on Hood a little too much here now. Once or twice, I get it, but goodness.
Did you know that Uber's PE ratio today is like near single digits?
Uber's cheap, but I don't know. I'm afraid Tesla launches robotaxi in 5 cities next year, and the narrative is just no one cares about Uber.
Oh, didn't somebody say Lyft was their short?
Yeah.
What firm was that?
Was it Muddy Water? I don't think it was Muddy Waters.
No. Uber or Lyft next year got a trend over $20 or 21. Lyft got a trend over 21, and then we'll see. If it trends over 25, she's 36. But yeah, I don't know. You know, I remember, dude, this debasement trade. Oh, it's just killing me because I remember when I bought a bunch of silver, I was looking at platinum prices and I was like, what's wrong with this? Because they were so cheap, platinum, and I didn't buy it because I was like, I just don't understand like what's going on. But dude, platinum, look at this. That's Analog Devices. Platinum, that thing used to be more than gold. Used to be more than gold. This is how easy this is sometimes. Like you see this, boom. I mean, C3AI, done.
That one's dead already. But I agree.
C3AI.
That is probably a short. All right, let's do one more to end out the day. I'll let you pick. What are you thinking?
Oh, let me pick. I mean, I've done all the ones that I'm. Let's see. I mean, Meta is good. Nvidia is probably happening. I liked Uber for a bounce. We talked about Marvell.
And again, guys, because the rest of the week is low volume, including next week, realistically, the technicals are going to really start mattering first week of January. So that's when a lot of this stuff will come into play.
Yeah, there's a lot of this kind of setup. I know this one's getting.
You still think McDonald's is a good breakout here?
Oh, you gonna go long McDonald's for the year?
I mean, if we have a recession, maybe. I don't know if that would be my long. That would be a little bit of my safety for sure.
You can do it. I mean, yeah. I think as long as this is holding 300, yeah. You're good. Yeah, I think we're good. There's not a whole Tesla. We looked at
Zscaler, cybersecurity.
Okay, so crowd, we should probably look at. So usually these sell off after like on earnings.
Yep, every time.
By the way, right? You don't go long CrowdStrike. Don't go long CrowdStrike ever on earnings. It's always a sell, like always, literally boom. And then after the earnings, it's usually a buy. I might be able to short CrowdStrike.
I think so. I mean, their multiple is good, but their growth is not that impressive for the multiple, to be honest.
Yeah. This looks like downside. This general area is a little challenged. I'm just gonna look at Palo Alto. It's sideways. Zscaler is. I'm not super in the space anymore, but like Zscaler was for a time growing, but by this point, there's probably somebody else that's gonna pop up before I know it. This is a rough one.
SMCI, you like it or no at these levels?
I think it's fine. But again, it's not like it is what it is. I think like this is a spot where like, okay, if you bought it, dude, it's just gonna go sub 20. I mean, I just can't see that happening, but I guess like I just can't see that happening. I don't know what the multiple is here, because now we have to get into like what is the real fundamental shit. Because if I'm just wrong on this, I'm missing something. Was it the best quarter they've had in forever? Yeah, it was literally the best quarter ever. But what's the PE on this? I don't know.
Do you like the charts on Path?
Yeah, I'm not in that kind of guy. It's fine. It's sketchy, but it's fine. It's a higher high. It's higher low.
I think a lot of these stocks are consolidating, as you mentioned earlier in the day. Like,
yeah,
they've kind of for the year they've made their move, and now they're consolidating, at least oscillating in a range.
Yeah, I mean, this is structurally fine, but someone asked me about. Oh no. All right. I think we're good. We'll have a lot to pick from, but 700 SPY next time we see each other. You taking the overs or the unders?
I mean, we had a pretty good day today.
We did.
I don't know if we can if we hold on to that tomorrow, then I'll say if we can actually like bust 190 Nvidia, then yes, I think there's a good shot. If it collapses right back to 185 tomorrow, then I don't know. We're gonna need a big run last week of the year.
I think it's a real possibility. So
I think
I'm going to take the overs. I'll take the overs for the Santa Claus rally right there.
It's actually lining up almost perfectly for that rally. It's literally 3 days away. 1.2%. Boom, 7,000. You're there.
Yeah.
So there's a shot. All right.
Right there.
Thank you, everybody, for being here. Jason's Twitter. I'll put that in the chat. Please make sure to follow him.
Merry Christmas.
Merry Christmas. Happy holiday. Jason has done this pretty much every Thursday of the. I think we missed like maybe 5 or 6 Thursdays of the whole year.
Well, some Thursdays. Most of the time it's Tuesdays. But I have been on Thursdays.
No, but most of the time he missed, it's because of earnings. So, it's not.
Yeah, I didn't miss. I was not allowed.
If we have Tesla earnings, everyone's obsessed with Tesla that day.
Yeah.
But we'll continue this into next year. Very, very grateful that people show up every Tuesday. And I will be doing an LA meetup in March, and we're going to hopefully have Jason out to that meetup.
Yeah.
And
it'll be a good one. It's been a good year, dude. Congrats. I will see you before the end of the year. It's not, I thought it was are we doing one on the 30th?
I don't think we're doing one next Tuesday. Because that's it's the day before.
The day before New Year's Eve.
Yeah, so this one's pretty much it for the year.
Unless we have a bonus one, which TBD. We'll see. All right, guys.
All right. Thank you, everybody. Appreciate it. We'll see you guys tomorrow on the Market Open.
Adios. Bye.